it to you afterwards. There we go. All right.
Oh yes, I'm glad you thought about that. Thank you.
Oh, no problem. When I really started in the group, that's all I used to do. Like I made myself of use by just recording Ro and Drew talking about stuff, and then like because I had the recording, I could go back and study it a little bit more before everybody else. They used to ask me like, "Bro, when you gonna release the video?" And I'm like, "Oh yeah, I got to do that. I got to do that." Oh yeah, for sure. I got you, fam. So that's all I used to do is really just record them early on or whatever, just talking about different stuff and just noticing that, different stuff in their trading strategy and stuff. So let's see. I'll start. And I mean, the thing I like about Baby Pips too is like, I mean, it's really written in a way that it ain't too long, even though it's 303, but they take their time or whatever, they kind of break down a few other little things or so. So let's see.
I actually started with Baby. I don't remember how many lessons I've gotten through.
Yeah.
I think I've gotten through like I don't think I got that far because I just started using it. Because I remember you telling me about that initially when I first joined the group.
Mm-hmm. I tell people that when they hit me up and they be like, "Man, I want to get them screens, whatever." And I'm like, "Bro, before you spend your money and get all upset because it ain't as fast as you thought, check out Baby Pips and look whatever." Then from there you're supposed to come back confused at the Baby Pips. Okay, I get all that shit, but how do I get it exactly like this? And it's like that part, it's a little bit interesting because trading. I mean, the only wrong way to do trading is when you're losing money consistently. Other than that, like nobody can tell you what's the right way to trade, if it's working for you. That's what I love about trading is that it is exactly what you make. We all get the same information and we learn all these same little tricks and stuff, but the trading strategy you put together is tailored to your personality. And you best, and so where you lack at best, whatever. Like for me, it's optimism. It don't sound like it's bad for trading. Oh, but it's bad for trading. Optimism. Oh, it'll turn around. It'll be good. Cut your losses. Cut your losses. All that sunny attitude. I just knew that was going to be the goal at the beginning. Well, it'll turn around. I trust the analysis. I trust my plan. And I'm sitting up there down $140, sitting up there, the house burning down. It's okay. It'll be all right.
All right.
It'll turn around. No. I'll tell you one thing, too. It's a couple of phrases that I'm gonna type up and kind of put it in our Telegram while we're talking. Like one of the first ones I'm gonna put in there is cut your losses and hold your winners. And I'm gonna tell you, I'm gonna go to some of the Baby Pip stuff, and sometimes I might bounce around a little bit. So let me know if I kind of get ahead of myself sometimes. I actually got to the point. It was recently, a couple months ago, where I was actually more nervous when I was up than when I was down. Because when I was down, I could just cut the losses and be cool. But when I was up, I'm nervous. I'm like, how long is it going to go? I ain't even supposed to look like this. I thought I was going to get and I mean, I was just leaving a lot of money on the table, a lot of pips on the table. And like, okay, it's like, all right, well, I'm satisfied. I got me 30, 40% on my account, so I should be cool. And then you go back and look at the trade, and it's like, man, I really should have just let it play it out. I would have, weathered a little storm, but letting it play out is how you get to, the multiple hundred plays and stuff like that. So, like, cut your losses and hold your winners. That is one of the very first things I make sure to like have drilled in. And I'm let me make sure to send you a copy of my trading plan as well. Now, while I mean, you can give it a shot and like play around with it like in the demo or so, but you realize like, okay, well, that worked for him, but for me, I need a little bit looser. I need XYZ or whatever, And so, you can. It ain't a one size fits all, but it kind of, I guess direct your focus on okay things I should be looking for and stuff like that, So let's see a couple of things, whatever that they go to the minute chart because the minute chart really tells it. Of course, the pip is just every little tick that goes down. Matter of fact, you'll look over here in my profit stuff, whatever. I actually don't have it under deposit currency. Normally, everybody has it under deposit currency, but matter of fact, oh yeah, into the nitty. Let me pull up the monetary cheat sheet because that joker comes in handy. It's funny because you use it for a while. Then you get to the point where, oh, well, I kind of got an idea of what range that pips is and stuff like that. So you would be using it at first, and after a while, you wouldn't even use it. Because I made it last year because I didn't know like how y'all know which lot size to put in, and how this and that or whatever. So I used to, I was just really confused on that for a long time, and so we just like, what the hell with it? Let's go into Excel and let's just make a little cheat sheet so you can kind of figure out, okay, how much pips it is and stuff like that. Because the pips are the same. It's the lot size that determines how much money you pull from it. So you'll have somebody like Roll will put $1 lot size in, and it'll be up 400 or 500, and like it's really he up about 20 pips, but his lot size is so large or whatever, it allows him to go ahead and capitalize really fast. On that or whatever. So let me see which one. Right here. Yeah, matter of fact, I'll just do I got to play in on the Euro now, so I'll just keep this one up. So like, on a 0.01 lot size, and also too, even though I'm sure you're already aware of this, but I always just like to let people know, lot size. I don't know why they call it lot size. It ain't shit but your bet. It is your wager, how much I'm putting on the line for this right here, So, because I know a lot of people like lot size, like what's a lot and all that stuff, whatever. I mean, the standard lot is $1 lot, so I guess that's the only thing you need to know. Is standard is 1, and micro is the 0.1 or whatever. But or is it it's like micro, macro, and standard or whatever. It's a whole bunch of extra shit you don't need to know. Only thing you need to know is lots or your bet size. Lots of your bet sizes. Every bet that you place will instantly go negative because of the spread. So every bet has like a predetermined spread. And this is I'd say it's about 90% accurate because the prices change and I don't update it like every so often. I'll update it maybe once every couple of months. Whenever I notice one of mine is like more than a few dollars off, and I'm like, okay, let me go ahead and update it or whatever. So every last one of them definitely has its spread. But the thing to really realize is this right here, like 0.01, because a lot of people kind of shit on the 0.01 because it don't get you the money you're looking for back. But a 0.01 is what raised me. 0.01s are excellent because, when you're early in the game, to forget a set of stop loss or to get caught up doing something or to fall asleep trading and wake up negative 100 pips, that is so easy. That's so easy to do. I done woke up so many nights boozy. He came for me. He done absolutely came for me. And the reason why is, oh damn, I didn't miss stuff or whatever. I didn't have my 0.35 lot size in, and that little mistake cost my account $350. If my account could sustain $350, so man, so like just knowing those lot sizes and the weight that they carry really will kind of help you in your confidence too. You're not feeling that confident about a play, dial down your lot size a little bit. You feel a little bit more confident about your play, use a little risk management and dial up your lot size. I told Ro's a very interesting person to study, because when I first got in, whatever, him, Drew, and like this other cat that was in the group, whatever, like those are the main people I was going to, and I'm like studying them, trying to figure out what to do. So I'm following their trades and I'm winning and losing and stuff like that, but I can't get it consistent enough. And then so I say, Ro, I'm gonna pull up on you. I'm gonna watch you trade. And watching Ro trade at first, it's a little intimidating because Fam ain't pulling out no paper. And, this and that, whatever, he's giving it a quick analysis. And then within 3 minutes, he's making his decision. And like really, because at the end of all this shit we're doing today, like the last thing is what you really want to do is dumb down your trading strategy where it could be something simple as, when I go to the chart, I'm looking for this. Like, we're going to go through all this stuff, but my trading strategy really can be broken down to one little statement. And matter of fact, I'll while I'm saying what my trading strategy is, I'll pull it up on the chart and kind of give an example of what it was. I'm gonna go back to that minute chart too, but let's see the day chart. Okay, so my trading strategy, or not my trading strategy, because that's everything in there. They call it like your winning edge. It's basically like when I'm looking at my chart, what am I looking for to act? So it's like your winning edge. Mine is I wait for price to wick out at a major support or resistance area and trade the channel. Now, an example of that, whatever, is right here. This little line right here, it was starting to come down because, this little area up here was kind of giving all these little wicks and stuff like that. You see a lot of wicks kind of coming together, whatever. That's usually a sign that somebody to kind of give you some action or whatever the other way. So, it went up and did its thing or whatever. It kind of wicked out. This area right here, actually, if I zoom out a little bit, you kind of see this area was a nice resting point for it. Oh, and something also, exact numbers and lines, they really don't exist. I like a lot of people will tell you, put it here and make sure you put it at the end of this here. And this, honestly, this whole little area right here, it's like, matter of fact, that's why I use these little squares right here, because the lines, they're so small. You think, okay, it's that line at that price, and when it gets there, that's when I do. And it's just not accurate. The market is always free moving. It's loose or whatever, so it might go slightly above the line, then come back down. It's like it's a whole bunch of little stuff or whatever. So with going my trading strategy, I had this little line right here, which if it had this little area right here that kind of rested on it. This little area kind of rested on it. This guy touched it while they all came down. Actually, this one actually broke through or whatever. But if I kind of zoom out a little bit more, especially on the bigger time chart, whatever, you kind of see a couple times where it hits that line. And so basically, I drew my little line here. I have my little ladders right here. And these ladders, they're really nothing. And we'll do a blank chart too. They're really nothing but just areas where, a lot of wicks kind of kicked it at. You know what I'm saying? That's really it. It's like, okay, a lot of different wicks kicked it here, or, resting point in the chart. Matter of fact, I could have added one right here because a lot of them kind of chilled right here or whatever. So I'll go in there and add my little step ladders. What'd you say?
Oh, no, I'm listening.
Okay, yeah. So I go in there and just add my little step ladders, and I'll wait for the chart to kind of show me something. So for this one, matter of fact, Ro had pointed this one out because this is the euro. I really be on the CAD. Like when we pull up the CAD chart, you'll see like this joker docked up. But I don't use any indicators. And it's crazy because all of the indicators, in a sense or another, they work. All of them work. But like the best example I heard it is for time. When you look at your watch, you don't need to put the time in a formula to get the better time. The time is what the time is. It's the same way with price. Price is what price is right here. So when the people use, and I don't knock indicators because they reflect what's going on with price or whatever, but they take price, put it in a pretty little formula, and give you something to interpret. That leads for me to trade paralysis because I did all this extra stuff. Oh, it just broke 200. There we go.
Oh, I'm sorry. Give me 1 second. My daughter just woke up. Let me go get her real quick.
Okay.
Okay, thank you. I'm sorry.
No problem. There you go. Get it popping. Let's go to the alerts. Ooh, that's a lot of alerts. I got to delete all these. Let's see. Oh, you know what? Let me go ahead and highlight these words.
Okay, hello?
Uh-huh.
Okay, I'm sorry.
No problem. Like for me, it's like 7, 9 a.m. You know what I'm saying? Like this is the beginning of the day, just about. London pop off at 2 o'clock. I like to at least be up to about 2 to 4. Maybe 3 if I get a couple stop losses in. But to about get a little 4, especially on Thursday. This is the last London trip we really get. This is the last one. So this one is a lot of times a chart or a pair will make its final push right here. Its last little push for the week. Like for this CAD play, you see I'm in right here, and I could get out right here. And if it starts to reject off this line, I will get out right here. But it has this little leg room to go down here. My anticipation is that it's going to push down here. Now, when I say, because it's only anticipation, whatever, because no matter what they tell you, no one can predict the market. That's something else about them indicators that I don't like is that they give this false sense of certainty. And one thing about trading, if you want certainty, be certain that you never know that exactly what it's going to do. You know, like you never know that, okay, it's going to for sure go down or whatever. Only thing you can do is prepare yourself for it or whatever and kind of use certain things to work out for you. I was, when you stepped away or whatever, I was highlighting some of these wicks because, I mean, I'm going to take a step back or whatever, but I just was just, you know, kind of showing you a little bit of my personal trading strategy. Is basically it's a support and resistance, which is all these little, you know, lines or whatever. And then I trade off the wicks because a wick entry is the best entry for me. If you look at, you know, okay, bam, you get in off that wick, you got all that. Like, matter of fact, even here, if you get in off one of these wicks, like let's say you get in right here and you were hoping for this, but, you know, you got all this in between or whatever. All this right here hurts if you like, okay, well, okay, I think it's going down. Let me put a line right here. So let's say you looking at it when it's like right here, like, well, I think it's going down. I'm going to wait till it go down. I'm going to wait for some confirmation. Then I'm going to get in. So you maybe wait till like right here or something before you get in or whatever. Then it kind of comes back on you. Maybe it hits your stop loss. Maybe it makes you nervous and take you out and stuff like that. You don't really got to deal with that when you get in off a wick. When you get in off a wick right here, it can do all this stuff. You don't care. Like for me, if I get on this wick, I'm looking at these wicks. If it, okay, there you go. It wicked out. Like if it come up here and kind of like start forming a little bit above the line, I'm like, oh, fam, let me dip out. But the wick entries, I mean, I'm still working on them, you know, still trying to get, you know, full in the groove with it. But those wick entries are some of the best plays, and you can see, you know, like, okay, well, you know, if this was live, how would you know or whatever? Well, if it was support and resistance, like if we couldn't see none of this right here, and the only thing we could see is this wick right here, I would be looking at this wick, and then I would put a nice little line on it. I'd be like, all right, let me put this line on it, go to a bigger chart and to see, okay, does it rest on it? You know, does it come over? Let's see. Matter of fact, this line right here on the month chart shows you that this line is heavily respected because that's what you want. You want a line that's respected, and the line is respected every time they get to it. It's kind of either stopping or wicking out. It's like respecting. And like this little line right here is really respected. Everything kind of went up and kind of wicked out or so. And that's why I was saying like them lines, they're not exact lines because some people be putting the lines up here, this and that. And I guess I can just use one line, but when I'm live trading or whatever, I like my little ladders. My little ladders give me different little points so I can check myself. Man, do I feel like getting out right here? You know what? I'm going to go do something. I'm getting out. You know, if I got time for it, let me go ahead and just set it up and wait for it or whatever. So I really like support and resistance wick entries. And when I say everything kind of works, because when I start discussing like Ro's trading strategy, Ro uses what they call the pin bar. You know what I'm saying? Anytime Ro in on a mean ass trade, you can hear him talking about the pin bar. And the pin bar, this is a pin bar right here. You know, it really ain't shit but a long ass bar with a mean ass wick at the top. He waits for a area on a bigger time frame to have a nice pin bar, and then he trades it. And because for me, I'm like, bro, you putting these dollar lots in with only 100, how's your account not getting snatched back? Is because when you get on the wick, look at this, ain't no more. It's like when you get on the wick, you can have such a small stop loss. Like I used to like, if this trade right here was going down, I used to would wait till it kind of came down, kind of retraced a little bit, and I would have got in like right here. Now, if I got in right here at a big ass lot size and it flushed up here to this little wick, that takes my account out. But if I get in right off the wick, okay, it's going up. Uh-oh, this little counter right here came and it stalled out. Well, let's just see if that's really a wick of this plan. By the time this other counter would have started, I would have got in somewhere. Right? No lie, just because this hit the channel, I would have got in right as soon as I seen it, right? And just took my chances with risk management. You know, I'm like, oh, you know what? Let me just roll the dice and get in. So as we're going through a couple of trading strategies, you really will see that a lot of them really kind of tie into each other because it's all giving you a description of price. You know, that's why I trade. Basically, the way I trade is called naked forex because I don't like all that shit on the screen. You know, because I used to have all that on the screen. Then I'm sitting here stuck because I'm thinking the Bollinger at the bottom, but the moving average say I need to wait. But it's just for me, it's just overwhelming. It got to the point, you know, I'm in the store with my wife and we looking up fruit, and we checking fruit and stuff. In one hand I got an apple, and another hand I got my phone looking at my chart. You know, I'm saying, hold on, baby. you know, it's doing something. I need to weigh this. The more indicators you have, the more things you need to take into account. Like for my trading strategy, the only thing I need to take into account is did it wick and was it at a support and resistance level? It's simple. You know, it's gonna, when we go through all the stuff, whatever, like, man, you talking risk management, you know, you're talking about stop losses and when not to use them and alerts. And it's funny because alerts is not shit. As you can tell, These are all old alerts down here. I use alerts all the time. And when I say all the time, like, let me give you an example of one of them, because you can customize them too. You can customize them to have them where they're sent to your phone, and you can customize them where they, where they just, ring you, let you know, whatever. So I've made actually custom alerts because, I want to hear it or whatever. So if you didn't have a stop loss, who's the bad ass? And see, like, now mind you, I'm in the bedroom sleeping. I hear him go off, and you can have the maximum iterations, like 1,000 times. So if I hear that, if I wake up and I hear that, I'm like, oh damn, I'm tripping. The same, and so I have a few of these just because they only give you like alerts and stuff, and those are cool. But I really like to be in the room or doing something and I can know for a fact. And the really only the two I really trade is the CAD and the Dragon or whatever. So and I have let's see which one. And then my wrong way. Shit's going sideways. Like, hey, time to get out of there or whatever. Because I mean, it's really like with trading. It's really like really being Johnny on the spot. A lot of times you just there it is. Okay, bam. You'll be trading lightweight stuff. For me, I'll be trading 30, 60 here, 30, 70 here, and then I'll I'm patient. Oh, and as a matter of fact, let me put that in your group right now. The market is not on your time. It is not on your time. And let me explain that. Okay, I'm a trader. I'm going to trade the euro. The euro trades in the London session. So tonight, when in the London session, I'm going to trade the euro. You really want to trade the pair in this session, but to go into the session just automatically show you for the trade, that ain't doing nothing but setting you up for failure. Let the market tell you, make yourself available in the market, but don't put it on your time. Because a lot of times I'd be like, well, I expect to be in this trade for 4 hours, and in 4 hours it's still negative, and I close and I come back and it did this thing, and I'm like, damn, what happened? Whatever. It's not on my time. I just got to be protected if it does go against me. So it's not on your time. Really consider, because sometimes you'll get in on the London and be like, okay, well, I tell you what, then I'm a cash out around such and such. You never know when it can go. It can be 20 minutes if the right news story drop. It can be 2 days depending on the play. With the I learned that a lot with the CAD, because the CAD operates in the New York session, and matter of fact, I think I just put that over there because I had a gentleman that joined the guy who joined last with me, and he was chopping it up, and he was like, bro, I don't which one are we all, whatever. So the CAD heavily moves in the New York session. A lot of the times I find my CAD entry in the London, and so like I used to wake up around 7 to trade the CAD, and the biggest, like the great entry came around 3 or 4 o'clock, and I'm like, oh damn, so let me try it now, and I'm playing catch up, and every time I play catch up with pairs, I kind of lose, so that never really works out for me like that, so it's not on your time. It's definitely not on your time, and the only thing you can do is really make yourself available for the market, and really just imagine before you get in a trade, okay, what's a terrible trade looking like? Like, what loss would I be like, damn, okay, it's time to get out. Whatever that PIP number is, money is, have that locked in your mind. That's what it looks like. So when it happens, even if you get back in, even if you end up getting back in on the trade, you close that trade. Because, matter of fact, I'll use Roy's example. Roy, his trading strategy where he puts in $100 in his account, because it's forced risk management. When you only have 100 in your account, you can only lose 100. It's forcing him to manage only $100. So that's how he gets away from saying like, bro, I'm gonna blow this motherfucker. So how do you get over that? Well, he limits himself. Well, okay, I'm only gonna put 100 in there. On one of his last trades with the euro, he cleaned up. I told him, I said, boy, you did your damn thing with it. I think it was a 4,000 play over a couple of days, which is, I ain't gonna lie, it was one of the biggest plays I've seen this year as a single play. So it was like really live, but it cost him about $300 for that. So because he got in and it wiped his account, which was $100, which he accounted for. So he put another 100 in, waited for it, kind of got in and wicked out a little bit. So his trading strategy, is a little bit more for disposable income. But for a fact that he knew like, oh, I'm on time, like it's about to happen, whatever. So let me just be ready. So he was like, in a situation like that, he said, yeah, I probably would have loaded up to like 5. And then if that was like all the way wrong, then I would have just been like, okay, well, let me just reevaluate because it might go the wrong way. I mean, the other way or whatever. So, for him, his risk management is only putting, the 100 in and just riding with it like that. For me, because this is, I mean, this is just about it. Trading and real estate with I sell like a little software on the side from time to time, but that's like occasional. This is it for me. So I don't have as much disposable income to $300-400 to just, have on the time, whatever. So for me, I use smaller lot sizes, but like, in increments or whatever. Like I'll have some 0.10s, a 0.5, 0.25, and I'm staying in throughout the week. So at the end of the week, I need to make at least 500 trading to withdraw. If I make under 500 trading, I don't withdraw that week, and I just let the equity ride into the next week, so I can kind of make bigger trades and stuff like that.
Okay.
Let's see. As a matter of fact, and those good old wicks. And just in case you're not familiar why the wicks are really important or whatever, I like to go to the minute chart, because the minute chart I don't trade the minute chart. I'm not that guy. I'm not gonna lie to you. I'm not that guy to trade the minute chart. I've seen some guys do it and clean up, and maybe that ended up might be your thing or whatever. Me personally, move too fast. There's too much more money on the line to lose that fast. I'd rather, at the end of the day, oh man, I safely got my 70 to a couple $100 versus getting my $100 in 2 minutes, but also losing 200 in 2 minutes if I'm clumsy. Because you can lose a lot of money just simple ways of being clumsy or whatever. But I like going to the minute chart because it really allows you to see candles formed and end in a minute, and you get to see all of the frustration that it goes through. Like this candle right here, this little green candle. Let me zoom in a little bit. This guy right here. So he started green candles. It opened up at the bottom. It's going as high. It's usually going as high as over the wick. It went as high as this wick. It went as low as this wick right here. So I really like I want people to fully be able to just read that candle when it's moving, whatever, because then you'll understand why wicks make so much so important. Because a good wick, and let me go to the day chart. A good wick means you wasn't about that action. You were talking all that shit, but you wasn't about that action. That's exactly what that means, a good wick. And let me give you an example. So we're looking at the day chart of the euro. And let's say you riding it down, and right here it kind of turns around. Now, mind you, this ain't no strong wick, so maybe you feel like getting in or whatever. For me, it's for me, I'd have been peeping because it ain't a strong wick. I like a good strong wick to show me that, damn, it's time to get in or whatever. So right here, it's starting to go around. It turned around or whatever, and it's kind of moving. And I'm like, okay, this joker might be moving up. But I do have my channel line right here, and I'll break that down a little bit too, the channel line. So I'm watching this joker. This candle started right here. It was green all the way up here. If you could imagine all this green, if you'd have thought it was a buy, you would say, man, it would have bought. But as soon as it would have wicked out this much of a wick means that the price started to go here, but momentum couldn't keep it here. Like he ran up talking shit, but he really wasn't about it. So he turned around and went the other way. That's what a strong wick just lets you know that they tried it, but it just wasn't enough. That's why I really like strong wicks, because a lot of times, you catch one, especially on a larger time frame like the day. That's why I'm still in this play, because normally I'd have closed by now, but I'm still in this play because this big ass wick was on the day chart. So I'm like, man, don't get me wrong, I'm riding it down to this little day mark right here. But after that, I might get back in, just ride it down some more. So a good wick is really like momentum. And then you'll see different people with their, indicators and stuff. There's indicators for momentum, like the stochastic and the RSI. And I can name them all. Matter of fact, if we go over here and look at the market, it's just overkill. It really is. It's just like who has time? Look at all these different indicators and alerts and people. And look at it's crazy. And they charging, so somebody had to make some money off of it. So it's just like, I done seen charts drawn up where you can't even see the candles. And if it works for you, hey, it works for you. So don't let me stand in the way if it works for you. I just know it kind of gives me anxiety to see all that on my chart. And for me to have all that on my chart and still not know which way to go, I'd be like, man, I don't know. I'm tired. Let me get away from it. Then you'd be frustrated and come back and the damn trade went the way you thought it was going to go. And it's like, you just, you spun yourself in circles. So that's why I just ditched them. I ditched all indicators and I used support and resistance in the line or whatever. And all indicators to an extent, work off of that, because I was just breaking down, me and Ro was talking about, he uses the moving averages play or whatever. His moving averages is nothing but a derivative of the Bollinger Bands, which ain't nothing but a derivative of trading outside the channel, which is kind of what I do, whatever. So it's like the long way around for it sometimes, whatever. But once again, if it worked for you, the hell with anybody else got to say, because all indicators work in some form of way. You know, some of them a little later, some of them a little early. It's kind of what works for you, but all of these work. And I think that's the part that kind of messes people up, because they kind of go through, you know, an indicator, it don't work for a while, and then they go to another one. Sometimes you got to give it some time to work and kind of find out, you know, what works for yourself. And so, like for me, it's the wicks help me figure out when momentum is getting ready to change. And this is a perfect example on the day chart. The bigger the wick and the higher the time frame, the stronger the move. You know what I'm saying? So this one right here, this is the day time frame. So this is a pretty big day, and this is a large wick. You know what I'm saying? So I'm like, okay, well, shit, let's ride it down. That's why it was up to 200 a few minutes ago. It's at 175, but London about to start. So, you know, I got my alerts in. Let me scoot you down a little bit lower. Just in case. Yeah, a little bit lower, you know. So that's why I really like trading with those good old wicks, just because they give you the momentum and stuff. So I'm gonna go back over there to over to old baby pips. So let's see. You got your lot, which ain't nothing but your bet. You have your whatchamacallit pips, and you know, your pips are just one increment that it went up. That's what I was saying earlier when I have the pips right here, because the same, you know, 68 pips on a 0.25 is 170, but 68 pips on, you know, the 0.01 was, what was that, like $5-6? So it's just a really great way to kind of train yourself into getting pips. Because if you can only get to the point where you can do 30 pips, fuck it, 30 pips. And because it's crazy. You would think to yourself that, man, Roe is killing 100, 200 pips. What he's doing is making sure that and it came with practice to get his entries that crisp, because his entries are crisp. And so with that being said, 30 pips on $1 is 300. You good. You good. So even if you like, well, I tell you what, because what I recommend doing at first is going in your demo, you know, trying out a few things here and there, whatever. You know, I'm gonna try supporting demand, supporting resistance. I'm gonna try supply and demand. I'm gonna try bowling, just, you know, try all the stuff that different traders you respect have tried or whatever, and kind of find the one that this one kind of feel at home. That's yours. You know, that's yours. It's really simple. You learn all this complicated shit to make trading very, very simple. You know, you could be, because mind you, I told you all of them work in some way or form. So, you know, you just try one. You try one for maybe 2 or 3 days on a trade, see if it feel comfortable for you. You know, if not, maybe you research, was I using it right? Because a lot of times we don't just be using it right. And then you'd be like, oh, it don't work. We wasn't using it right. You know, so you kind of mess around and you demo with one of those. Then eventually one of those will start giving you some blue screens. And you're like, okay, I'm ready to take this shit live. Let's go. At that time, most people take $200 to $400, go in the game and be like, okay, it's time to ball again, baby. That's not live. I recommend really putting $50 to $100 in the account only, and only trade 0.01s until you're comfortable seeing, you know, blue screens, red screens. Like even with red screens, like it gets to the point with red screens. I mean, I might refer to them as losses, but in my mind, I'm not thinking about them as a loss. I'm thinking, did I execute my trading plan? Like if the trade is down and I have to close it where it's a loss in my account, the real success is that the mark before I got in this trade that I said I was going to get out on, if it started turning sideways? If you get out on the trade when it started turning sideways, when you said you was going to get out before you got in the trade, that's a good trade. That's a good trade. And I'm like, what you mean? Like, you didn't make no money. That's a good trade. You stuck to your trading plan, you cut your losses, and then you're available for the next trade. What you don't want to do is have one trade where it could jeopardize your ability to trade again. And that's what happens when a lot of people go in and they start dollar lots everywhere. It's going down. Dollar lots are very powerful, you know, under the right use. It's just a tool. It's a great tool if you know what you're doing with it. But a lot of times, that'll just snatch boys out. Boys just be getting, snatched out. And mind you, I can say that because I was the exact same way. All I used to do was follow people plays. That's it. Follow people plays, sometimes 300, sometimes Boosie. You know, I had one time where I was plexed up with a dude in the group. It wasn't his fault. You know, like his account went negative 600 and then he went up to positive 8,000. My account went negative 400 and wiped me out because all I had was 400. And then when it turned around, he's still in the play and winning and stuff like that. You know, kudos and high fives and memes and shit. And I'm sitting there salty, you know, I put in the same position. The shit didn't work out for me. Well, you know, number one, you were just following blindly without a trading plan. Like, because now every now and then I follow a roll trade, but just because he say sell, that doesn't mean I'll sell. I'll line up his chart and using my own trading strategy. So what do you see? And when I came over here and I lined up my stuff, I was like, oh yeah, he right on, he's spot on. That Joker wick died. It's on the such and such. You know what? I'm gonna ride with you, bro. You know, like that's how you use the group. Really, that's the way you really use the group. Like that's really a really way to really use the group, because you can get a lot of plays just by, okay, just because you said that I'm not gonna follow your play, but using my own trading strategy, let me take it to the chart and see if I come to the same conclusion. You know, if I don't come to the same conclusion, okay, well, you know what, bro, if it work out for you, by all means, I didn't see it, you know, so go ahead and do your thing, whatever. But you really want to be able to, anytime somebody, it says, hey, I feel like the CAD's going long, this and that, whatever. If it's a pair you trade, pull it up. Just don't enter the trade because somebody that's, you know, trading well, you know, just because they say it's going that way. Because me personally, I ain't a lot of people be like, bro, which way the CAD going? Because I'm always on the CAD. And it's hilarious because I'd be like, I have no fucking clue. But here's what I do know. When it moves, I'm going to move with it. You know, that's what I do know. I don't know. You know, like right here on this chart right here on the CAD, it's coming from this line and it's going to this one. So my initial thoughts is in a little uptrend. It should be coming from this line to that line. But, you know, you see all these other wicks, it could wick out right here and go down. You know, so right here I'm sitting there like, okay, well, I'm thinking it go that way, but what if it goes the other way? You know, so like, you know, you always have to have that, you know, in the back of your mind. Okay, so if it did go the other way, how would I be protected? You know, so one of the things I like to do, and I'm gonna strip this chart and using this guy right here, I'm gonna show you how I like kind of figure out my risk management of what I'm gonna do and stuff like that. So let's see. Let me move this guy over here. And when you're using this screen, there's a lot of little tricks that can help you maneuver easily. You know, you got all your little tools and stuff up here. But, you know, if you're ever trying to move, you know, your line and stuff like that, and it's giving you issues, you have to double click it till you see this little box right here. You know, in that little box, now you can move the Joker and change the line size and all that stuff, delete it if you want to. You know, it's little stuff like that that'll help. This little thing right here, I have my the lot size that I want to trade today in there preloaded. So all I got to do is fire that Joker. You know, that is one-click trading right here. You know, you can unclick that and it goes away. If you ever quickly want to, you know, get the stuff off your screen, they have the object list right here. You can take that and it'll pull up everything you have on the current chart. That's a lot of shit too. It's funny how I don't use indicators anymore, but I mean, I still have my horizontal lines on my indicators now. I just, you know, it's not all the colorfuls and stuff like that, but you know, that's it right there. So let me, let's see. Let's delete all these guys. Yes. And never be afraid to wipe your chart, because if it's really your chart, you can do it again. You know, and then, you know, I always love that challenge. Like, damn, I done got these perfect. Well, it's practice and repetition. If you for sure about it, okay, you'll be able to see. So this trade right here, let's say, let's get in right. Let's see. Let me put a line right here. So we come to this chart. Matter of fact, no, we got to start all the way at the top. We're gonna start like it's a Sunday, you know, because on Sunday, it's really the best day for me, really at the end of the week, really, but like Sunday for me, you know, Sunday's really a good day to find some time to get over to my chart and kind of peep it for the week. And when I say peep it for the week, like I'm gonna, like right now, I'll go ahead and walk you through like the whole week process, you know what I'm saying, how the week would technically go. So matter of fact, before I would even go there, I would either come over to the monetary site. Matter of fact, I like using the monetary site because the monetary site has 2 different forecast calendars on it. So you can kind of just check for it, whatever. You can, don't get me wrong, you can use this FX Street. And this is the one I used to use before we made the website. I use this one tough, you know, just to know when like they had big news that was going and stuff like that. And matter of fact, when I say big news, they got all this extra stuff on it because I don't use it. Let me go down here and we don't want none of this. All we want is the orange and the red. You know, that's it, all the big news stories we want. And honestly, if I could, I'd remove all these extra pairs because I really only trade the CAD, the pound, and a little euro, you know, a little euro if somebody say something about it and I'm in the mood to go check. Because a lot of times I was like, I don't feel like checking. I did my work. I don't feel like doing all the extra stuff. So like at the top of the week, I'll go ahead in my trading journal, you know what I'm saying? I'll open it up, get some time or whatever. It usually take like an hour or two. I mean, that's if that really, but I usually try to take like maybe an hour, maybe really 30 minutes, but sometimes I'll stretch it to an hour because I want to get a little study in, maybe read a chapter of a book that I already read, but it means different things to you at different levels of trade, you know? So come over here to your chart. Let's say you trade in the euro, you know, so the euro is your pair. You're going to be looking at anything that has euro or USD in it, you know. So I'm like, okay, bet they got one right here. That's red. So right now, what I'll be doing, like I'll have Monday, Tuesday, Wednesday, Thursday, Friday wrote, and I'll have all that wrote in the. I'll write them down, but I'll use this one over here just to kind of show like what I'll have, whatever. And mind you, I only do the CAD, so you know. I don't really do the CAD, so it really would just depend on, you know, if you're doing multiple pairs and stuff like that. But in my trading journal, I'll have it just like this, and because I'm only doing the CAD, you know, so I'll have which day and what time the news story supposed to be popping or whatever. So if it was news at 7 a.m., you know, if it was 8, you know, I kind of do it like that or whatever. And then certain days it wouldn't be no news, like London tonight really don't got no major news, so Wednesday will be blank, whatever. I'll kind of like line those up. And the reason why I line up news, because news is what provides the wicks. Whenever you start studying like trading news and stuff like that, which is fundamentals, you know, technical is your chart draw up. Fundamental is your news, using the news to kind of trade. And then there's sentiment trading, which is basically how the banks are feeling, you know. So the news is actually what creates more wicks than anything, because a decision will come out like this federal decision, which Fed decisions are always huge. It'll come out and everybody will overreact to it, and the chart will start moving one way crazy. That's a setup for failure. Don't chase it. Don't trade the news. Trade the reaction. And let me write that in the thing, because that's a damn good one.
That was good. Hold on.
Yeah.
Don't trade the news.
Trade the reaction. And when I say that, because matter of fact, let's go back over to that Euro day chart. I guarantee this up move right here, this all was most likely a news story. Some type of news story broke, and it was probably, matter of fact, we're on the, let me see. Also a little trick too is that sometimes you kind of want to see the same time, but you want to see the same wick, but on a different time level. But when you change the time level, it's going to give you more wicks. It's going to kind of throw off exactly where you were at. So I like to use like a rectangle. I use like one of these little see-through rectangles. And when I come over to a smaller chart, I can see exactly where it was, you know, versus being like, where was it at? Stuff like this. So you can put that just right there. I guarantee all this right here was news. This was some type of news story that broke. Mind, this is a 4-hour. Let me go up to 30 minutes so you can really see. Oh, and this little guy up here, this little green one right here, you see how every time I keep going and look at my chart right here, like I'll wait for it to do it. See how it snatched me back to the end? Like that can get really frustrating. So every now and then when you need to, you got to turn off this little green button up here. That just means keep my chart live. And it's terrible when you're trying to back test and study because it keeps yanking your chart up. So I'll turn that off when I'm going back or whatever. Now, this is on the day chart. This happened all in, one day when it kind of went up crazy or whatever. On the 30-minute chart, mind you, that was one day over there. But on the 30-minute chart, let me see. There it goes. On the 30-minute chart, you can see like right when it peaked up, whatever. That whole day's major move really happened. These are 30 minutes, so that's an hour, 2 hour, 3 hour, about 3.5 hours was the day's biggest move. That was the day's biggest move right there. So all that right there, I'm sure a news story dropped. And everybody was freaking out to something, and it came and went all crazy or whatever. And then sometimes it's like right after the news dropped, that joker will rally one way, then start going the other way. So right there, it's like, okay, well, let me just wait. Let me draw my little line or whatever and kind of see how it goes. And after all that dust settled, that's why they say stay on the bigger time frames too, so you can kind of see the real story. That joker wicked out. It just it came all the way crashing back down or whatever. And so that was most likely a news story. And so when the news pushes one way, I'm not saying that it'll always go the other way, because sometimes that news will be truth. And what you'll find out is that it'll go up, then it'll kind of come back down, but it won't come back down to where it used to be. It'll just come back down right here somewhere, and then it'll go back up. And right there, I would get in on the re-entry of that wick. So let's say it was going up, and then it started coming down and it kind of wicked out a little bit, then started going back up. Like, okay, well, it just found itself a nice little base. Let me go ahead. And I'm very sure I can find a live example of that real fast of where it did one of those numbers. Let me see what's going up. Look like it's gonna go down. Well, that's a bad example. Let me see. Okay, this is a kind of good one, I guess. It was going up, and let's say this was a news well, I thought this was the news, and I'm thinking, okay, well, I don't trade the news, I'm gonna trade the reaction. So it did one of those numbers, and it started going down. I could have either got in right here and wrote it down and say, wait a minute, right here, and either got out, or maybe I wasn't too sure yet because it was a weird time or something. So I'd have just, so you know what, let me just peek real fast. And like this little hammer right here, this wick right here, I'd be like, okay, let me see. Okay, matter of fact, that little wick would have gave a perfect opportunity to put a nice little line that crosses through most of the wicks or whatever. And right there, like even if we didn't see none of this right side, we would have put a wick at this little, we would put a line on this little wick. We would have been able to see like, okay, that one was above, so that's showing good. This guy was below, maybe it is a sell. Oh, this is another wick. And then this one would have came, wicked out a little bit more and went back up or whatever, you know. And so it's like, it's different little ways. And that's, this one is actually too, like, even though this is a nice little play right here on the 4-hour chart, I really wanted one that kind of continued going up or whatever. I can see one right here on that one right there. But you can kind of see how you can kind of use the news really to, like, especially for your pair. Oh man, you can really use that. You can really use that news for just like, no lie. News tells me that that's the day I might have a good ass entry. You know, like it's a May because you never know. You know, news happens sometimes and don't shit happen. It'd be so wild. You be like, man, it's about to go down. The news happened and nothing happened, and then you realize that because everybody was expecting it to go this way. The real trade really happened last Friday. Everybody in right now just the suckers. You know. So you really, you know, you can trade the news that way. So let's see. I'm over here at the top of the week. My pair is the CAD. So I'm looking for anything Canadian and USD. I don't make it overcomplicated. I don't even care what the news is. I don't care what the news is. Only that the news is orange or red. That is big news to them because it's a harder concept to grasp. But the reality of it is you're trading basically other traders' reactions. You know, that's what it basically is. Other traders' reaction is making them, sell, buy. So, you know, when the news story drops or whatever, the big news story, that lets me know it might be action on that day. And whether it's good or bad action, that action is going to lead to movement. And all I got to do is just ride it from one ladder point to the next ladder point. That's what I call everything on my chart. My little supporting is just them the ladders. You know what I'm saying? I climb the ball up, climb it down, you know. So those are my little ladders or whatever. And you'll see like Ro has one this little scanner he used, harmonic scanner or harmonic scanner. That's it is harmonic scanner. It's a cool chart because it kind of lays support and resistance lines for you. You know, so you know it kind of lays them for him, whatever. So he used those, or so I used to use it a lot. So, but you know, I'd be like, you know what, I can put my lines on Sunday. You know, because a lot of times I don't put new lines through the week. I put my lines on Sunday and just throughout the week, kind of adjust and ride it or so. So you grab your news. You know, you have you know where your news is, whatever. So you'll know, okay, well, I'm gonna be looking for this day. News that happens on a Tuesday and Wednesday, those are some great ass entries. You know, so if you have a crazy news story that's dropping on the Tuesday, Wednesday, that might be a play you could be in for the rest of the week. Now, the CAD actually works a little bit different because the CAD get popping on Friday. A lot of times the CAD be popping on Friday because the Friday is when like all news come out and stuff like that. So Friday is like the end of the week. A lot of people don't even trade on Friday because it's shutting down. But I had to learn to adapt my trading strategy to my pair because on Friday, the CAD will be acting fool. You know, it'll leave you a good opportunity to close out the week really good. The only thing about closing out a trade on a Friday, you can't get that bread to about Wednesday, you know, next Wednesday. So you close out a good trade on a Friday, don't think that's for the weekend. Don't do it. Because I done been there many a day, you know. As a matter of fact, I had a trade last year in Bitcoin where it hit for like my biggest Bitcoin play was around like 4,000 in the weekend or whatever. It just was shooting up or whatever. And so I was like, okay, I'm gonna go to Vegas. Let me cash out. Okay, bet I'm gonna go to Vegas. And I was in Vegas for about 2 days at the McDonald's. You know what I'm saying? Just all right. Well, I'm gonna eat that. I'm gonna eat at Treasure Island. You know when that come in. You know, but it gonna keep it cool. You know, so yeah, I was just eager, excited. It hit. I'm like, oh hell, let's go. And I'm sitting there waiting for the bread to hit, tapping the PayPal screen. Like today, you know, I called up there. It ain't nothing they can do for you. Like, sir, it takes a couple business days, depending on the way you take, depending on the way you have it set up, and depending on how often you make, you know, transactions and stuff like that. Because I ain't gonna lie to, I tell Ro all the time, I'm jelly as hell. They get that boy his bread no later than 24 hours. I've yet to see where that man has had to wait more than 24 hours to get his bread. And there's been times I done had to wait 5 to 7 days to get my bread. That was a different broker though. I don't mess with them no more. You know, but I was like, oh my goodness, you know. It's funny because my wife, you know, I worked 9 years at Methodist, and so the whole time we were dating for 10 years, you know, and mind you know, we got together at 19, so it's funny because we were serious, but the first couple years, I'm like, I'm not thinking marriage. I'm like, okay, we together, you still cool, I'm still cool, all right, you know. So, you know, I ain't tripping with it. After 25, it was like, okay, I might mess around, just need to see, you know, what's going on. But our whole time dating and stuff like that, you know, I have a job at Methodist, and it's a decent job, it ain't nothing bad or whatever. I'm not doing a whole bunch of craziness. And I tell her a couple months before we get married that, you know, I'm thinking about quitting, all this other stuff or whatever. And she's like, wait a minute, you know, what's going on with this here? You know,
right.
She's a little nervous and stuff. And the only thing that I could show her, you know, was either the work being put in and like, you know, screens or whatever. It just so happened for me that was when Bitcoin was acting a fool. And so she was quite skeptical. And that's why I love her for being skeptical. Because at first I used to get like a little tight by it. But if it's true, like, you know, she loves you. So of course it's going to be like, I want to make sure you ain't on no crash dummy mission. You ain't buying no snake oil or whatever, you know. And so that Bitcoin, it was November the 11th. Whatever week was November the 11th. Oh, it's almost a year now. November the 11th. Bitcoin had 40 hours of green candles. 40 straight hours of bulls. Straight hours. It was absolute amazing. Absolute amazing. I mean, on a Saturday, I had opened up a trade maybe Friday night, and I closed it Sunday, and it was up like 4,000. You know, like just Bitcoin. I had like a couple 0.25s in. I mean, I ain't gonna lie, it kind of spoiled me, you know, at that time. Because right after that happened, I quit. You know, all right, I'm good, y'all. You know what I'm saying? Turns out I'm good. You know, I'm gonna leave this to y'all. You know what I'm saying? And it kind of spoiled me a little bit because, you know, you get 4,000 in a play. You're like, all right, I know Forex now. Oh, my next big tip. You don't know Forex. You know your trading strategy. The moment boys get caught up in that, I know what I'm doing, get out of here, they lose a lot of bread. I'm not sure if you're familiar with Noah. They used to be in the group.
Yeah, I know who you're talking about.
Yeah. Noah is an excellent trader. And when he first started, like when I got in the group, whatever, he was kind of like new in it or whatever. He had a trade, like he was just steady trading a couple hundred, 1,000 here and there. He had a trade go for 20,000. Could you imagine you doing all your work and your trade finally popped for 20? I'm still at my 20. You know, your trade finally popped for 20, but you know, it popped for 20, been putting the work in. I know Forex. I got it. You know, he took out a little bread to do his thing with and kept about, you know, most of it in there. Over the next couple of days, because, you know, when you hit 20,000, you thinking your next stop is 200,000. You know, that's what you think. My next stop 200,000. So the next couple of trades, you know, they were a little bit looser. The lot size was a little bit longer. Where I'm not sure exactly what happened, but when that man came back, his account was down 13,000. 13,000 gone. And like, because at the beginning he used to like teach a lot more and stuff like that. I know he's doing this thing with trading and MCA and stuff like that, but he used to do a lot more teaching with it. And that was one of the best lessons he gave me, was that you're going to study, you're going to get blue. Eventually, what's hard and confusing going to get a little bit easier, and you're going to start seeing blue screens. Don't fall for the trap of I know Forex. Which basically means you let your guard down. I'm gonna bleed this bitch and this and that, whatever. Of course, have that positive attitude, but the moment you start really getting too comfortable, it's gonna smack you. You know. Matter of fact, another something else that I use in my own trading strategy. And matter of fact, I'll pull up the chart because I say I don't use indicators. Here's actually the only indicator that I use right here. This little guy right here. I love this indicator. It's called a drawdown email alert. It's supposed to email you when your account gets drawn down, but I don't care about all the email. Only thing I care about is that it shows me the percentage that my account is up. So it'll show you that, you know, okay, you're up 47%, whatever. A lot of times, when I hit 120% for the day, I'm done trading. And unless like the world, some crazy shit didn't happen where everything's falling apart, I might get back in, but 120%, I'm done for the day. And the reason why is because my biggest losses come after my biggest wins. Is because no matter how much I tell myself, you get $100, man, it could have been 200. You kind of get that bug and you start itching, whatever. So a lot of times I try to close my trade at 40%, and I try to stop trading at the day for 120% profit. Like I'll be done, because my whole thing is, while I could shoot again and try to get for 1,000%, if it's real, just do 120% tomorrow. If it's real, just do it again tomorrow. Don't risk it. Don't get greedy. Let me go in there and try it again. Ooh, no, you hit the market, you stung them, dip out. 120% in any field, they would love that. 120% on any field. So, I have a point where I'm done. Where I'm like, okay, I'm good, regardless of what's going on after this or whatever. I'm straight on that. So you really want to make sure that I'm respecting Forex, where not only like, okay, I've got my strategy and I'm killing charts or whatever, but at no point am I going to allow I'm not going to allow my next trade to be jeopardized. And that's what happens. If you like, for me, like, the account is at 403 or whatever, and this play, it was at 200, it's at 185 or whatever. So whatever happens, I don't want this play to be able to jeopardize my ability to trade again. So I'm not trying to have that, and I ain't gonna lie, I because a couple of days ago was a good trade. So I withdrew this week, and I was like, okay, cool. Then I'm gonna trade it back up to 500. Then I'll be cool. But depending on how the night go and tomorrow, I'm like, I might be able to get me 2 withdrawals this week. One withdrawal will do me well. 2 withdrawals will even do me better. So you want to have like a nice little system in play. I guess for checking your emotions and stuff like that, because everybody has a money reaction. Money evokes some emotions out of you. I don't care who you are. Trade the demo as much as you want. -30, -40 in the demo. I ain't tripping, bro. I close it. In the real account, -40, -50. You thinking, damn, it's at -40, 50. It can go up to -70. It can go up to -80. Damn, what do I do to that? All the time while you worrying about that, you're not thinking about. You're not looking for your winning edge. You're not looking for what's gonna make you dub. You playing from a standpoint of fear, and that never really works out with trading. Whatever you have to, like, for me, know the risk and accept the risk. And that's why now that we're back over here, we can go to, let's go to a different little time frame. This is a perfect one right here. So let me zoom out a little bit. Remember the day chart. Yeah, the day chart is perfect. All right, so let's say we're looking at this chart, and let's say even though I'm looking to ride this down, because I had a buy-in earlier, riding it back up to this little level right here, but I'm actually looking to ride this down. And the reason I'm riding it down is because if you look at the month chart, you got this mean-ass wick right here. Like this actually right here, this is the cup and handle formation. This is the cup, this is the handle. After the handle finishes forming, it usually comes down. So I'm like, long-term, I'm looking for it to fall down, but every now and then it'll find a nice little support area, then it'll bounce back up. So let's say we're looking at this chart and we're thinking that it's going to go up some more, so we want to get in on the buy. And so, like, for me, I would say, okay, let's zoom in a little bit, it's a little small. There we go. So if I want to get in on the buy, I'm probably going to look at like the last area kind of really rested at, which, don't get me wrong, you could put up here. And it's really depending on how you feel. You can put it right here where everything kind of hit there, sit there, like kind of rested there. I probably would just put like somewhere just down here, because I like kind of, me and the wicks be cool. And so the chart is right here. So if we get in on the buy right now, it's going to enter us in right here. So this little tool right here, this crosshair is an excellent tool. Real quick, so you can know exactly what you're working with. So let's say you're thinking about getting in the buy, and you're thinking about riding it up to this level right here, because that's the last time it rested. Matter of fact, let's see. I'll go up here. You say this is the last time it really rested. So I'm thinking that I'm getting the buy, and it's going to go up here. So it's 2 things I would do, and eventually, I promise you, you start just eyeballing them, and you be like, that's crazy, because I used to use the Fibonacci a lot. Then I started laying the Fibonacci down, and the Fibonacci was covering all the ladder points I had placed. I was like, that's crazy. I ain't got to use you no more. All right, Fab, you was cool, but I'm good. So, this little crosshair right here, you take this guy, and if you click right where price is and drag it down, you see where it says 945? Mm-hmm. That's actually 94.5 pips. That's what that means. And another example would be right here where it says 757. That's actually 76.6 pips. They give you this extra decimal as a courtesy, and so you can kind of know which way it's leaning for. Whenever you read pips, you can always, for the most part, ignore the last one. You know, the last one is just it's really a favor. You know, a lot of books don't explain that, but Astro Forex, which is probably the most boringest Forex book there is, it took me 7 times to read it. It was terrible. But at one point, I was like, okay, this boring ass book won't stop me. So let me just get in here and have a headache and this and that, whatever. But they the ones who explain it well. Is basically like they quote you about 4 spots, 1, 2, 3, 4. And this last one, it's just really it's courtesy, basically letting you know which way this one is closer to moving to, so you can get the pip. So let me go back over here, this little crosshair. So I'm thinking about getting in right here on the buy that is going to go up or whatever. So right here, I'm going to drag this down, and I'm going to see that to this possible stop loss, it's about 90 pips, 94. You know, but I said let's just leave it at 90. We'll say 90 pips or whatever. So in this current situation, I'm thinking, okay, my stop loss is 90 pips. How much is it to the next go point? So the next rising point that I'm thinking about riding up to is 175 pips up. You know, it says 1753, but it's 175 pips. So right there, I'm thinking about I'm looking to maybe risk 90 pips to get 175. And honestly, the way I like to do it is I do what they call a 3-1 rule, which is basically if I risk 30 pips, I'm targeting 90 pips. And I like a nice little 3-1 ratio, and I'll get into why later, because it really I'll tell you, when you learn the percentage of how many times I have to be right to break even, like you, but like, bro, you ain't special. Like, really? If you was shooting at the free throw line, they would bench your ass. Like really, like the way I have my trading strategy set up is that if I'm right 1 out of 4 times, I break even. That's 25% break even point. And my trading strategy has to be like I'm right 40 to 60% of the time. So every 20 trades, I'll look back and be like, okay, was 12 good? If 12 wasn't good, I need to stop bullshitting and kind of get tight with it, or I need to get like, okay, well, I maybe need to make a change. So at 25%, that's a break even, right? So if I'm right 1 out of 4 times, I'll at least break even. And the reason that's like that is because of the 3-1 ratio, which is basically if I risk 3, if I risk 30, I get 90 and stuff like that. But and I'll break down exactly why that's so live now. But we know right now that this stop loss is 90 pips away, and we know that the take profit area is 177 pips away. And also we know that my account has $403 right here. Now, I don't want to trade all my account on one play, just in case I want to catch something else. So, maybe I'm thinking to myself, well, okay, well, if I want to trade something else, whatever. So let's say either I leave it at 4 or maybe I cut it to 2 or whatever in my mind. So I'll come over here and and mind you, this is the full process. I'll be like, okay, bet I'm looking to risk, almost 100. Which one of these am I comfortable with? Which one of these ain't going to kick my account ass too much? And honestly, at this type of play for 100 pips, because I really don't risk 100 pips. I'm a 30 pip risker at max, and then I'll just cut my losses. But if I was risking 100 pips, this right here would do me well. I would risk, 79 out of 4, I can do that. And what's the result if I win or whatever for my almost my 200 whatever? Matter of fact, what was that? Okay, I seen something flash on another screen. I didn't know what was going on. So like for this one, it was 174. So we were round up to 200, whatever. So it's basically like, do I want to, 79 for like 158? And mind you, them numbers ain't really live for me because I like to risk 30 pips for like 90 pips. That's usually the way I like to really go. But for this example, let's just say we risking 100 pips. I know that just because my account is, where it's at, whatever, that I don't want to risk no more. It's a 0.10 lot size, because I'm willing to risk that or whatever. So I know, okay, I shouldn't deal with more than a 0.10 lot size. But I'm a little nervous. So even though they say I can deal with a 0.10, I'm going to put me a 0.70, and that allows you to trade. If if your trade it works out right, you dub up and you good. If your trade works out wrong, you learned why. And you ain't boosted. You get the opportunity to trade again. And the opportunity to trade again is where it's at. Now over here, mind you, all this here we have available, whatever, if you really want to say, okay, at the beginning, no lie, at the beginning, a really good way is to say, let's say I put 100 in, And if you use the 5% trading plan strategy, which is like you just trade 5% every day, you try to target a 5% dub, and it works. But the reason I was having trouble with doing this one is because on certain days, I'd be like, okay, I'm gonna take my profit at $5. That's what that means. Like 100 for 5%, that whatever. So every day you don't take nothing out of this account. This would be an account where you would like let ride. You don't take nothing out, but every day you just keep trading the principal 5%, and it like grows over time, or whatever. It's a real helpful strategy when you first begin, and if you're trying to figure out exactly like, okay, well, how much should I be targeting this and that? Like if you had 100 in the account, you had 5 or whatever, this would be a perfect opportunity. So you'd be sitting there, okay, I need $5 on my next play, with 100 in there. So you can come over there and let's see. Okay, I need $5, so if my, $5, whatever, I'm looking at, okay, well, like for me, like I like I'm gonna use a 0.01 lot because I'm nervous and it's new and I'm just trying to get in. So I'm looking for a play for about 50 pips, really about 55 pips or whatever. So you can really start seeing how like you can really use this little lot size calculator to kind of help you figure out exactly how much can you risk. Because a lot of times we don't really know how much we can risk, and we'll kind of overtrade a little bit and we'll boost you real fast. Or the spread against, a lot of times we'll put in that dollar trade and they go down 30 and we're like, damn, we losing already. Bro, that's just the spread. So if you're down $35, you're really only down the spread in $5, so like you're really not down. A lot of times we'll be like, man, I'm down. Like, bro, you ain't even at the spread. You relax. Because I ain't gonna lie, that should be my thing. I'll get in the trade, and if it takes too long to get positive, I must have been wrong when you get out. Like, bro, let your trade breathe. Another good tip is that once you get your trading strategy going and you in the trade and it starts giving you that uncertainty, because that's what happens when you trade money, just think to yourself, why did I get in on this trade? Like, why? And if it does go sideways, my account not going to be blown. You're like, all right, well, damn it, let it ride. Let it ride. You really want to get to the point where you have a mentality where I see what I'm looking for. I use risk management to know that this won't take me. Like, see, my risk management from Row Risk Management, while they're two different strategies, they work out perfectly for our personalities. Row has forced risk management. He can only lose 100 at a time. Worst case scenario, me, I can lose more than 100 at a time, but I'm going to take smaller lot sizes, and then I'm going to use my little 3-1 ratio where I'm like, okay, well, I'm gonna risk 30 pips. I'm gonna target around 90 pips, and that's what I'm gonna do, and I'm gonna kind of keep going that way. Because even if we did it over here, let me see, -30, -30, -30, 90. That you see, that's how it breaks even right there. So I had 4 trades. I lost negative stop loss hit, stop loss hit, stop loss hits. Oh, I got one. Broke even. Broke even at 25% being right. So if you get to the point where you can dial that up to 40, 50%, 50-50. If you can dial up to a 50-50 stance, you'll sit up there and profit every week, at least 25% profit on your account. And mind you, you go over to the monetary percentage plan and you say, well, that's what I'm going to do, 25%. That's just 16 racks. Now, the reason, the number looks beautiful. It's a little misleading because I know for me personally, I'm not leaving that money in all the time. I need to take that motherfucker out for some bills, for XYZ. This guy will earn this money, so that's actually one of my issues. I have another trading account that I'm just like, I call it my, that's just my steady Eddie, you know what I'm saying? Steady Eddie, and it just stays there, and I'm just building it up, a couple months in, trying to just get it to rise up, whatever, not taking nothing out of it. But a lot of times, like, I'll be doing it over here with this account, and work like that. Like, oh, that was a lick. Come on up out of there. It's better in my hands than yours. Come on up out of there. And so I'll take it out or whatever. But you really want to kind of, figure out exactly what works for you. I know when it came to Drew don't trust a broker nor a bank to save his life. So he's always like, shit, after I finish my big play dub, I'm taking it out. I'm taking it out because I don't need to be at the mercy of my own fuck up. So I'm gonna take my bread out, and then maybe I'll leave some profits in and only trade the profits. Matter of fact, one of the guys in the group, Mooch, I think his name is Monetary Mooch on there now, but that's all he does. He hasn't made a deposit in ages, and it's because he only trades the profits. He doesn't let it boosty. He uses a nice little risk management, whatever, but like he only trades profit. So if he dubs up if he got 200 in the account and he makes a 600 trade looking at 800, he'll take maybe 400 out. So his original 2 is now 4, and he'll trade with that. And that's the way he does it. Is like, I don't want to deposit more money in. I want to trade my deposits. and mind you, it's a great strategy. It works out for them well. Sometimes I do the same, but a lot of times I'll be like, you know what, let me go ahead and pull that out real fast and see, So it kind of boils down to exactly what works for you when you build your trading strategy. But using this little tool right here, like especially this little chart right here, it'll at the beginning just allow you to kind of see exactly what. So anytime if you ride, like let's say I'm riding this chart down, which is actually what I'll probably be looking to do, just because I'm thinking it's gonna come over here and reset. I think that it might not do that shit at all. It might run through that. So that's why you got to really I think it's gonna do that, but remember, you don't know. Because the moment you start saying, I know it's going here, you know you finna be broke. Like, no. They got fake outs and crazy runs and stuff like Bitcoin. Bitcoin's terrible with it. Like, let me go to this Bitcoin chart. I was pulling it up because Bitcoin about to pop out real soon. Real soon. And look at this wick. This is a day chart. Look at this. This is a terrible. This is a day chart. Look at this wick. Could you imagine being in this live and it crossed this line and you say, I'm going to get in on the buy? Mind you, if you got in the buy from here to here, you won. But let's say you thought, bro, Bitcoin back is going down. I mean, this wiped accounts. And Bitcoin moves so heavy that a 0.25 from Bitcoin versus a 0.25 in CAD is like no contest. The Bitcoin is probably about 6 or 7 times more heavier than those. So, it snatches. That's why people are like, man, I'm going to get on them cryptos without learning to trade currencies? Oh, you wild. You wild. Because if currencies move fast, cryptos are the flash. If that's what that is, because they go fast. And while they have a lot of potential on the table for a lot of different bread or whatever, that's something that you kind of want to work your way into. But this chart right here, let's say it started the wick out right here. Let's say it gave us this wick right here. Like this is the wick that it gave right here. And that's what I'm actually hoping to see in the next couple hours, a wick like that. If I don't, I'll just wait for it to form a little support and get in. If it does form a support, because sometimes it might go into a little consolidation. That's a little sideways. The uptrend, the consolidation sideways, and the downtrend. Those are the only 3 things charts do. They go up, they kick it sideways, and they go down. A lot of times your entries want to be during when they went sideways. So a lot of times I'll look for a wick inside of a consolidation. And you kind of start seeing how the strategy, while it's simple, I'm looking for a wick at a channel. You start seeing how it gets a little bit more layered. Okay, well, I'm looking for either a wick in a consolidation or complete turnaround. Like this one right here was a wick, and I would have seen this I don't know, just share whatever. Then this joker would have came oh, bet. Matter of fact, is this at a resting line? Because if it's at a resting line, I probably would have got in. More likely for me, I probably would have missed this guy because he wasn't at a mean resting point. But I would have got this guy because he was at a mean resting point. Those resting points, the stronger the resting point your line is on, that's going to give you some action. Like this one right here, it kicked it here, did some stuff here, kind of wicked out a little bit, went a little over, came back, respected there, came back and respected there. That's why I'm looking at this line ooh, it's going. If you see my alert, oh, these are the alerts right here. These are my alerts that I have in. Like you see, I got the alert right over there. I want to be notified as soon as it wick out so I can start to get back in. To put in your alerts is real simple. And it's crazy. These are all my alerts. I really need to delete some. Sometimes my wife calls me a tab whore because I'll have my Google Chrome open with 30 tabs and stuff. And she be like, oh my God, you doing the most again, whatever. So let me clear all them alerts out or whatever. You can right click right where you want your alert at, right click, go down to trading, and you'll see over here has an alert. Now, the alerts work well if you're at the house, but if you finna go on the road, you want to change this to, no, not this right here. You want to change this to notification. And you can actually hook up your phone, the MetaTrader app. You can hook that app up to this app. And so you'll get a notification. My notification is the Kendrick Lamar, ain't nobody praying for me. Ain't nobody praying for me. I hear that. And I'm out in the streets. I know my stop loss is hit. Damn. I be in random places. Ain't nobody praying for me. Damn. What happened, man? No problem, bro. Don't worry about it. I know what that was, And if I hear if I gotta slap a pussy ass nigga, I'm gonna make it look sexy. That mean the TP hit, and so then I start dancing a little jig and get back to work. But mind you, not everybody does little stuff like that. But the reason I tell it is because I want you to see it's basically I've taken different things from Rose strategy, Drew strategy, Noah strategy, the people in the group that learn from, and I said that strategy works for you well. I need to see what works with me in the same words well like that. So that's one of the things I definitely like to do is make sure that my notifications, they let me know, let me know when it's popping off and stuff like that, because you want to be Johnny on the spot. So this is let's say it wicks out right here. This is why I'm able to trade a little bit more too, because let me get my crosshair. Let's say it wicks out like right here. Wicks, you don't really need that much of a stop loss. With a wick stop loss, I would actually put it at probably like slightly above the wick. Like let's say this wick was right here. My stop loss would be somewhere like right here. And so, my entry being, if this is the wick, maybe somewhere like, maybe let's say right here or something like that. Like, watch, I don't like all these green lines. Get this board orange color. So we can kind of stand out. So let's say this starts to wick out and I get in right here. I'm really giving myself a lot of credit. Let me come down. Let's say I get in right here. So let's say I get in right here. That gap, when this is the day chart, so this is a big ass gap, whatever. But listen, let's go down to the phone so we can kind of see a little bit more. Yeah, so let's say I got in right there and then wick. My stop loss probably wouldn't be all the way up to this line. But on the wick, it probably would be a little bit more. So let's say it was like halfway to that line. That's 36 point stop loss. But on the day chart, because like if I got in right here, it looks like I'm riding it back down to this line right here or to this line. Like I'd watch it go to this line. Then if it wicks out, I'll get out or something. But if it continues, well, no, I'm supposed to hold my winners. So I'm trying to get out of this habit of like, oh, nah, never mind, y'all boys tripping. Like, bro, take the chance. Relax. Let it breathe. Because I'm trying to get to the point where I'm staying in bigger trades with it, but it comes with the psychological factor. After you learn all this other good shit, you're going to find out it is you versus you when figuring out like, okay, here it is. I'm tripping again. Here's my negative reaction to money, whether it's up or down or whatever. But, when you get in at a good spot like this here, you're only risking, what is this? This is, 30 pips? This was that's 50 pips, but I'm not riding. Remember, I told you I like to do 30 or so. So I'd be riding it to like somewhere like 36. And the reason I say 36 pips or whatever, because remember when you first go into a trade, that it gives you that spread and it goes negative. So a lot of like for the CAD, when you go into a trade, it goes into a spread. That spread is -6 pips. Now I know that just because that's my pair. So when I say I'm risking 30 pips, I'm risking 36 pips, the pips and the spread. So I say about 30, 35, whatever. So let's go over here. Let's right over here. I'll even say, let's see. Let's say 35, 30. I'll leave it at 37. And I'm risking that for, mind you, all the way down here, it's 400 pips. Mind you, a lot of times I don't ride it the whole wave, whatever. I try to get most of it. I'm loosening it up to get more of the wave. But a lot of times you don't know. Like, look at this one right here. This shit happens so often. You see right here where, let me turn this thing off. Ooh, this is some grimy shit. You see how the line was right here, right? And you see how the wick came just to it? That happens all too often with stop losses and take profits all the time. Like a lot of times I used to find myself like, okay, I'm going to ride the wave. I'm going to put my TP down here. And I'm just going to leave it alone. And a lot of times when I would come back, I would find out that it came almost right there, then wicked out and came back up and this and that, whatever. So a lot of times, like, okay, mind you, I told you I'm risking my 30 for 90. So in a play like this, I'm like, okay, I know for a fact I'm going to get at least 90. And then maybe I put in a trailing stop. Ooh, and a trailing stop. Oh, trailing stop is so gangster. Let's go over here. So you finally got in on the play. And you can make you a stop loss. So I'm in on the sell or whatever. So let's see. When you drag these lines, they give you the stop loss or the TP. So when you drag it like a sell, when I'm dragging it up, so it's gonna give me the stop loss. So I got me a stop loss at -75. You can take this stop loss and you can drag it up a little bit. So no matter what, it'll clear me out at maybe $75. That's one way to do it. That's a locked in 75. No matter worst case scenario, you're good. But what you want to do when you're up more than 30, 40 pips, something that you can use is called a trailing stop. And a trailing stop is so gangster because it drags your stop loss along. So let's say you want a trailing stop at 25, 30 points. Now, mind you, these are 30 pips or whatever, 25, 30 pips or whatever. So basically, it would continue to, like your stop loss is right here. It continues to drag your stop loss. It goes down. It keeps dragging your stop loss down. And that way, if it snap back more than 20, it takes you out. It's an excellent way to steal extra pips. You know, your stop loss and your stop loss is cool. It can protect you, but it can limit the bread you had or whatever. You'll come back and say, it took me out at 75, but damn, they got up to 250. Damn, I sure wish you would have took me out a little bit sooner. I ain't tripping on my 75, but with a trailing stop, that's how you make like, that's how you really like secure longer trades. And I don't do it often because a lot of times I just take my profit and go about my business. But if I'm really feeling the groove on the trade, I'll put in a nice little 35-point stop loss and be like, whenever this pair snatches back more than 35, take me out of that. And you can find yourself getting an extra 20, 30 pips out of a play, which kind of can help your equity and get you to your goal faster. So, so you got to really think about using, your stop loss, to protect yourself. You take profit so you can secure your bread, and then your trailing stop. So, it's kind of like a combination of all of them, but you can only use it when you have a trade that's up, because if you try to use a trailing stop when you got, you only up 20 pips and it pulls back 20 pips, your ass going to be broken even, you know what I'm saying? At best broken even if it didn't take you out for less or whatever. So you really want to use a trailing stop after you're up a little trade or whatever. And it can help you turn a $75 play because when you went to sleep, you said, okay, like right now, but this is a perfect opportunity to use it. You would use this when you're getting ready to go to sleep. So, okay, well, I'm getting ready to go to sleep. Like for me, I'd probably say, all right, what's 40% or something like my account? Maybe $99, well, that's cool. You can go to sleep, wake up, and then hit the stop loss at 84. That's cool. Or you put your trailing stop in and it goes all the way down at nighttime and then shoots all the way back up. And then you out. And then you go back and check it. It's no greater feeling than waking up and knowing that your trailing stop saved you. So you wake up like Christmas. I wonder what it took me out at. Let me see. I was thinking about I was going to get like maybe 85 pips, 70 pips or something. $85 out of 70 pips or something. So let me see what it took me out at. Ooh, that bitch took me out at 130. Man, like that trailing stop really comes in handy for extending your bag, So, okay, I got me a nice little something. How do I extend it to this $75 play? How do I make it extra 85, especially when I'm asleep? Because that's when they get your ass, when you sleep, and you get comfortable, all that, whatever. I remember Ro had me rolling, talking about being up a couple $100 and went to sleep and woke up to that goose egg. That goose dad ass hit him. It's like, boy, it'll do that to you every time. It'll do it to you every time. You get comfortable and it starts snatching you out, you don't definitely need that at all. So that trailing stop really can help really like a whole lot. So going back to my CAD, my little naked chart or whatever. So at the top of the week, I've checked my news. I see that the CAD got some news on the Tuesday, Wednesday, Thursday. So what I'm gonna do now is I'm either gonna set an alert in here, or I might even set a Google notification where it lets me know like 2 hours beforehand, like, hey, peep your chart, get you a peep in or whatever. So after I peep my chart, whatever, I'll go over here and if this is the top of the week, let me get rid of all this stuff. If this is the top of the week, I really like to go back and really hit the in the month time frame. I don't look at it all the time because that's a more patient move, and I really don't. It's to trade on the month alone. You got to be a super patient and breaded up person. You know what I'm saying? You really do, because that's a lot of patience and waiting. So a lot of times, what we're looking at now is the art of back testing, and on the month chart, like this goes all the way back to 94, and on the month chart, like you see, that's a quick scroll over. It don't really take much, whatever. So a lot of times when I start from the bottom, like when I'm like if this was a bear chart on a Sunday, first thing I'm gonna do is I'll scroll all. Mind you don't gotta scroll all the way back. You can actually start at the if you want to start right here, that's cool too. But this is my pair, and I recommend that everybody has that pair that's their pair. This is your pair. The president, the currency nickname, which news give you more juice. You get really familiar with your pair. And so when I'm getting really familiar with my pair, I go back to the start of the chart on the month. And I just really, the first thing I'll do is I'll just do highs and lows. So you'll just come over there and like, let's see. Let me get I didn't know which one I was using. I was using red. Let's see. That'll work. And so I'll kind of do just a couple tops and bottoms or whatever, Matter of fact, for argument's sake, I'll just do that one, whatever. I'll kind of look in, whatever, kind of see a couple tops and bottom, maybe do a couple of those or whatever. Scroll up to see that they get a new high. So you got a new high right here. Did he get a new low? We did get a new low. Got a new low down here. And see, go down some more. Did he create a new high? Oh, he created a new high right here. You know, kind of scroll down. Okay, so then I got that. And then I kind of come back and just start doing more resting points. It's crazy because it really will look like a little ladder when I'm done. You know, a little ladder or whatever. So I'm like, okay, I see a couple of things resting right there. Like it's chilled right here, and these kind of came up to there. This kind of crosses, so that's a nice little resting line. I see another one right here where they kind of kicked it for a little bit. That's cool. That's cool. And you kind of start seeing too, like a lot of the areas have already been hit. You know, like you can call this a little area. I'm not gonna call this an area, but I mean, you could if you want to. You can get real. You can get as specific as you want. Yeah, specific as you want. So let's see. Right here is another kind of good one. Just because it kind of was a lot of them that went horizontal. You could do right here again. Again, it's just preference. Hell, you could do right here at this little top right there. Matter of fact, I will do this top. This is a nice little. Everything it respected here, it respected here, and it respected here. So that's a nice one right there. And let's see. And mind you, like on Sundays, I promise this is what I'm doing. I'm coming in and get my little lines. And now I got my lines drawn up on the month chart. And something else you can do too, if you ever get like, okay, that's just too much going on. Sometimes I'll pull up the same pair, but maybe a different time frame or just with all the lines on it or so. So I got my CAD over here on the month. I went back from the beginning of the chart, did my ups, my downs, then I did a couple resting points in between. And so then I'll come over to the trade and you want to kind of get a broad-eyed picture of it. So kind of zoom out on your chart a little bit and kind of see what's going on. Really just tell yourself what. Matter of fact, if you have to do it at the beginning, just use your finger. It went down, it went up, it went down. And then like right here, even though right here and right here this is definitely down. This is definitely down. This ain't really gave us a full downtrend, you know. So like this still got leg room to go, especially because this wick is so strong. Like don't get me wrong, this is a strong ass wick right here, and after this wick it started to kind of go up a little bit for a nice little retrace. So I have been riding in between these lines a lot, whatever. But this strong ass wick lets me know that we're looking at here, and eventually here, you know. So okay, I'm looking at it went down. It went up, it went down. So the last one that I see, like this one right here, this is where I would draw my little trend line. And so I try to take at the tip of the point and I'll try to get, you know, really I want to connect 2 to 3 dots. And so I'll connect my little 2, 3 dots, whatever, just like that. With channels are always parallel. So like when I do the bottom of this channel will be like this somewhere, you know, so you can kind of drag it in between how you want, whatever. When you're doing a down channel, the top line is the one that needs to be respected. The bottom one can be disrespected. Vice versa with an uptrend. With an uptrend, the bottom line needs to be the most livest line, and the top line just needs to kind of keep it in a line or whatever. So this right here, this little trend line, this trend line right here, and this trend line, these are my channels. This is a channel right here. So basically, what you're supposed to be able to do in a real channel, you're supposed to be able to trade a real channel from here to here to here to here to here to here. A real channel works like that until it wicks out and, you know, do some crazy shit, then turns around or whatever, which you kind of get a heads up or whatever. Now it's a art, not a science, because I was riding this one down and it kind of, you know, went a little bit further. Riding this one up and it didn't go all the way up there, kind of wicked out and turned around. That's why I tell people these lines are your reference points. Do not think of these lines as exact science because it will burn your ass. It will burn. And I know that because I'm such an exact person that I'm thinking at this number I want to get out, at this number I want to get in. And it's like, no, just ride the move, ride the wave of it, you know. The simplest trading shit says the trend is your friend. It sounds so simple and dumbed down, but it really is. The trend is your friend. I saw this major wick out up here, a lightsaber wick out up here. So I'm thinking, ooh, you know, at the uptrend, and it wicked out. And even though it came back up, it didn't cross this line. You know, like let's say it wicked out right here, and then it came right here, and this guy went back up a little bit. Like this wick is ignored just about. But the fact that it wicked out right here, it went down, like it wicked out right here. You thought it was going to be going down for a while, but it kind of wicked out and came back up. The fact that it stopped right before another line, like this line wouldn't cross, it didn't want no smoke. This is like, if you would have missed this one, this would have been your second confirmation that, oh yeah, bro, it's going down. And you can kind of see that when I told you, when we first began, I'm telling you about my trading edge, whatever. I'll wait for price to wick out at a major support and resistance area and trade the channel. So right here, even though it ain't all the way there, it's wicking out. It's close to the edge of the channel because I like to trade the edge of the channel. The middle of the channel, I mean, I feel like you just look, you can make trades, but it's a lot of money to be lost in the middle of the channel. But when I get in on these channel ends, I find myself with a lot of different little trades, you know, a lot of cool little trades. So I went in there and, you know, I peeped my news. I back tested my chart with my trading strategy, which is my trading strategy, support and resistance and channels or whatever, you know. So you can do the same thing with moving averages. If you had moving averages, let me go to this guy. And I'm not going to use a whole bunch of indicators because they just really not my thing. That's why tomorrow we have a webinar. And Chris in the group, whatever, he's going to be going over his strategy. He uses this Ichimoku and moving averages, some other stuff. And it's some cool stuff, whatever. But I was looking at the chart. I'm like, bro, that's just a lot going on. Yeah, I don't know. You know, I want to make this as simple as possible. And from what I've gathered from the good traders, you need to get down to under 3 minutes. You can peep your chart, make your decision, and live with it. That's your goal. 3 minutes, no matter what's going on. On Sundays, of course, you'll spend more time because that's when you actually do your little research on it or whatever. But for the most part, you'll be like, okay, well, bet then. Let me just go ahead and in 3 minutes, I should be able to make my call. And if I can't make my call, I need to wait until the trade is somewhere it needs to be. But this is the moving average, whatever. This is just the, you know, the average of its moving, whatever. It's supposed to be every time it goes above the line, it's getting ready to come down. Every time it's below the line, it's getting ready to come up. It's not an exact science, and so for that particular reason, I'm like, well, if it's not exact science and it's just as regular as everything else, well, get this extra shit off my screen. You know, so that'd be my thinking behind it. Like, if you ain't gonna be like clear cut, like liver than everything else, like I don't need all that stuff taken up. As you can see, these lines take up enough. So, you know, I don't be needing all that, whatever. But so let's go back over to the month. So I then came over there, peep my news, so I can know what day is probably gonna have the best entry for me. I drew up my support and resistance, which are my little ladders in between. And you see, like, you know, at first I just did top and bottom. Then I went back and claimed a few resting points and stuff. Sometimes you'll find a few more resting points. Like this little part right here looks to be a nice little resting point. Sometimes when I use my little shapes or whatever. Like if I'm not want to do everything, I might do like a little shape like that just to let me know, whatever. And then these little triangles, those are perfect places to get like a nice little wick. So I did all that on the month. This is Sunday. And now I'm going to go down. For me, my trades are normally entered on the 4 hour or the day. That's the time frames that I really like to trade. And actually, once I get in on the day, once I get in on the 4 hour, I normally usually just go up to the day chart and ride it. So I'll look for the 4 hour to get me an entry. So here I am on the 4 hour chart. Let me make it down, whatever. And I see that, okay, you know, with that over here, this aligns. So it could be going up a little bit more. On this smaller time frame, you'll see there's more different little resting points. So maybe you want to put a resting point with maybe a different color, just to let you know that was a different time frame or something, or maybe just a reference point. You can use a little triangle, or whatever. So I put one right here just because it was kind of respected there a little bit. And if I thought it was going to be going down right here and moving. If I thought it was going to be going down right here, I was like, okay, well, like matter of fact, right here, this is a perfect example. It wicked out right here, right? This was a perfect fake out. You see bam, you see bam, you see wick out here, wick out there. Then it wicks out right here. And you're like, oh, time to ball again. You know, right here, you know, let's say you got in on the sell right here. Matter of fact, let me go ahead and put a little shape so I can show you how I'm thinking about this. Remember, I told you these lines are not exact. So normally, if I get in like right here, I'm like, even though this is the line, I'm looking like like the first couple of meters around that line, I'm just looking for a wick. Let me know if they playing me or not, you know. So like right here, this would have been this wick right here would have been a tail. I wouldn't have got out right there because this wick is a strong wick, so I would have stayed in. But this tail right here would have been like, I don't know. So you know, if I got in, that's the beautiful part about wick trading. If I got in like right here, my stop loss would be somewhere like right here. That how many pips is that? It ain't shit. I tell you that. It's 8 pips. you know, which the spread is 6, so that's down 2 pips or whatever. So if I were able to go up a little bit more, that's like maybe 10 pips risk or whatever. So let's say I got faked out right here, because sometimes you're gonna get faked out. It comes with it. This would have been a perfect way. This would have been a perfect one to fake me out. This would have got me. I know it would have got me. This strong ass wick would have got me, and I would have either been on point enough to get out right here, but knowing me, I would have tested the trade, and so it would have hit my stop loss, which would probably been like right here. I would have lost the whole $8-10 and be like, oh damn, let me trade again, you know. And so let me wait. Like right now, it's crossed this line or whatever, and I'm thinking, okay, maybe I'm riding over to the next one, whatever. But I have a real matter of fact on the day chart. On the day chart, and sometimes you'll kind of see with me too. Like even though I have this little line, sometimes on the smaller time frames, I'll draw another line here and there, or whatever. So I think the line that I had before all this crazy shit happened was I had like a little line, something similar to this. So the fact that this line has been violated a little bit and it's kind of pushing up a little bit, I can see the CAD for the rest of the day. If it stays true to this, going up a little bit more up here before it kind of comes back down. And this is really we've been in a little down thing with it going down. When your channel lines get violated like this is called an imbalance. You know, this right here, because mind you, we thought this was the down channel, so we're thinking when it comes up here, it's going to wick out and go back down, which I still think is going to wick out and come back down eventually, whatever, but we just got to play the waiting game. This right here is an imbalance, which means two things whenever it's crossed my channel, like strongly crossed my channel, not coming back. Either you're at the beginning of a whole new change. You know, like if we go over to the week of the month, imagine the CAD has actually been bullish for the last couple of weeks. But like, you know, when it crosses that little line or whatever, you be like, man, I should be able to either ride up for a while or you getting ready to see a mean ass wick out. Like this right here going up, whatever, this might all end up being one wick, one crazy ass wick that ends up you trading the other way. You know, you end up trading the joker the other way. So you want to take a look at your chart, have your pair, and I ain't gonna lie, you're gonna go through a few pairs. If you're ever confused on where to start with the euro. The euro is a safe pair. It don't move too fast. It's actually eventually you're gonna get mad and be too slow, because my first pair was the euro and it just was too damn slow and I didn't have the patience for it. So it's going down. Sell, lose money. It's going down, sell, lose money. It's going down, sell, lose money. Ah, hell with it. Go away from the euro, come back, the euro went down. Like, come on, man, because it's a slow pair. But it's perfect for beginners. And it's funny because I say it's perfect for beginners. Like Ro don't trade it, and Ro's not a beginner, but he uses it to his advantage. Oh, I know this is a slow pair, so when it move, I know it's about that action. So it's just another way you can kind of layer stuff into your trading strategy, you know, as you see fit. The euro, I trade the CAD because the CAD and the oil are directly correlated. And, you know, if we don't get nothing else news down here, I mean, people who don't even know finances will tell your ass how much gas is. Gas going up. Gas going up, a barrel of oil went up. A barrel of oil went up, the CAD is going down. It's the most simplest way for me to track my pair is that if I'm kicking it with my uncle and a goddamn Trump gas going up to $3, gas going up, ooh, that must mean oil going up. I mean, the CAD must be tripping again. You know, like it's little correlations like that you can use. And matter of fact, that brings me to something. And imagine some of this stuff is just stuff you'll be studying later. But what was that? Investopedia. Investopedia is another excellent website. I actually use it for a lot of my stock trading and stuff like that, just to learn and kind of be in the loop on stuff or whatever. I'm gonna put this link in there. It's a nice little article with a cool little video talking about different things that correlate. Because, you know, our pairs ain't shit but stuff that's correlating right here. You have USD and the CAD. And whatever's at the first one is the one. So for $1 you get 1.31 CAD. You know, so it's all correlation. Whatever, everything's kind of correlated. If the US dollar goes up, the CAD goes down. The CAD currency goes down. These are two different currencies that's making up this one chart, this one pair, and vice versa. If Trump starts fucking up, like Canada ain't did nothing crazy, but when he come out there and start that bullshit, oh man, the US dollar investors, they thinking themselves, my money not safe with this crazy dude. So the dollar loses faith, and as a result, since the dollar weakens, the CAD currency goes up. And the CAD goes up with them. So whenever you see this CAD pair, this pair will move down then because the US is the first one. So right here that it's been moving up, that means that the US dollar is stronger than the CAD. That's what's going up. And whenever it goes down, which is overall has been going down for the month, that just means overall that the faith in the dollar is weak, so it's going down. It's little correlations. There are a few of them. Gold and AUD, the pair, what's that, the Aussie or something, whatever. That one correlates. Silver and some shit correlates. I can't remember which one. Oil and the CAD correlates. You'll find different little pairs that correlate, and all that stuff is doing is kind of giving you, just like the news tells you, like gives you an opportunity where it might be a great entry. I'm gonna trade your reaction. The same thing with correlation, because a lot of times, like I have the investing.com app, which is an excellent app for anybody to have. It comes with alerts and little notifications and shit, and so it'll tell me Saudi Arabia is looking to raise the price of oil, or oil shoots up such and such. Oil shoots up. All right, well, shit, let me go check out my CAD. The CAD should be going down. Now, mind you, it's not an exact science, because that's every time you think something is exact science, it's going to smack you. But if you can use stuff as a, you know what, that's going to be a heads up for me. Like, those are my indicators. That's an indicator for me. Like, okay, well, let me go see. Y'all talking about this going down, and y'all talking about it going up. So the oil's going up. Let me go see if my CAD's starting to fall. And if, like, let's say oil went up, and I come to my CAD, and I see 2 weeks right there. It's go time. It's absolute go time. At the end of a channel, oh, my God. I'm going to drop a mean lot size, and we're going to stand back and watch the results. We're going to sit back and watch the results. I'm gonna type up probably in the Telegram, probably 4 or 5 of the main trade edges people use, and by all means give them a shot, try them, not try them. Or so I just want you to see like the main ones folks use, and then you eventually see. So I'm gonna put mine in there. I'm gonna put Rose in there. I'm gonna put Drew's in there. And it's funny because with mine it's support and resistance. With Roe, it's the harmonic scanner and pin bars. With Drew, it was Bollinger Bands at swing points. And it's funny because swing points just mean that the biggest time frame, this was the high, this was the low. So he's waiting for a Bollinger Band to be outside of the high and the low, and that's when he's staying them. And he catches some very strong moves by doing that. And plus I want to hear Chris' strategy tomorrow, because he has a nice little setup going right now. I was looking at the other day. It's not bad. So I want to know a little bit about it. I might not use it at all because I like my trading strategy. I just want to really grow into mine more so I can pull out more bread, whatever. But you want to, also I'm going to write a couple of them down so you can kind of see which ones. I recommend going in your demo and practicing maybe for a week, trying different ones, trying different pairs. If you're ever in doubt, because matter of fact, the guy who joined the group a couple of days ago, named was Chevis. Me and him, I told him, because his job, his timing is terrible. He don't got a lot of time at all. So I told him, you might want to just sit some of your money in stocks and let it grow until you have time. But trading is a learn. Trading. So trading just sexy. You be like, oh man, this boy moving. Oh, let me get in.
Right.
So he's been trying to get in on this trading stuff. And I told him, I said, I want you to understand the power of this lot size. So I put got him on the demo. I put $1 lot size in. I put a buy and I put a sell. And I said, we're going to leave that for 2 days and we're going to come back. In 2 days, one of them was at 270. The other one was at -1 something. He's like, damn. I said, all right, now see why it went that way. And then vice versa, the same pair. We're going to do that with 0.10s. We're going to come back. And then when we came back, one of them was up $45. One was down $30-something, whatever. And just showing, like, you see, it can go up. It can go down. We get paid for basically telling them which way it is. To me, it's like if we on a dirt road and an old school fella say, which way is the nearest town? If you tell him the right way, you're going to get paid. If you tell him the wrong way, he's going to steal you. That's how you going to do it. You're going to like, nah, that's the wrong way. Matter of fact, and another example for it to think about too, bulls are the green. That's when it goes up, and bears are the way that goes down. If you think of it as a bull over here pulling it, and a bear this way pulling it, you can actually see the strength of it. Like, you can actually tell a whole tale. Like right here, the bulls were winning. Right here, the bulls got a little tired, so the bears kind of had an opportunity. The bull, he's tired, but he gave it his last shot, and it went up a little bit. Then the bears took over. Pulled it down. The bears started losing juice, and this little tug of war consolidation. And so you kind of start seeing like the bears, the bulls, the bears, the bulls. And you'll kind of be like, bears, bulls, bears, bulls, bears, bears. No, bears, bulls, right? Yeah. So right here, this is a bull. So I've actually missed the main move, so I don't remember I told you I don't like trading in the middle. So I've missed this move, this bull move. So one thing I need to do is set me an alert here, maybe set one up here, and now I'm waiting for the bear because it's only going up and down, up, down, up, down. So like you get to the point where all your trading strategy, like right here, this is a clear opportunity. It's like, okay, well, maybe I think it's going from here to here, and maybe I can get on the trade there. But if I'm unsure, if I'm not too sure, I'm risky, just wait. Go to a nice time frame and find out exactly where your resting point is. Where you know, like right here, this excellent little point right here. It was respected here. So this is a nice little point right here. It passed through this one right here, and I'm looking for that right now. So right now, what I'm looking for is a wick here, a wick here, or a wick here. You know, as for to get this major move. I can go down to a smaller time frame and maybe I find like this, let's say this candle closes right here. It closed above this line, so I'm like, all right, well, bet then let me get a few pips to ride it up. But I don't like nickel. I don't like penny pitching like that. Getting this little bitty ass move. There's no room for error. This and that. That's not a play. That's not a gangster play to me. The gangster play would be to be patient and to wait till the two things happen. This joker wick out somewhere over here, or if it starts consolidating and then going back up, it's like, it found a new base. Like you see how this line right here, let's say it went up right here, and this line became a new consolidation area. And then I would move my alert slightly below, slightly above, and when it starts departing from this line, I will ride that trade that way. And you find yourself catching a lot of them like that. Really a lot of pairs like that, a lot of plays like that. You'll find yourself drawing up your chart, you know, putting everything there, and then you'll find it in a nice little consolidation and trade it out. I've seen one strategy where, and I've used it myself, but it's a little tricky sometimes. You know, the banks, me and you, we enter on, let me go to one click trading. I know, what the fuck is that? Let's see, new order. There we go. This is perfect. So me and you, whenever we enter a trade, we enter on instant execution or a market order. If you ever hear when they say market order, that just means that you are entering on this chart stock pair right now. Instant execution. So we're gonna enter. Our play is gonna go negative, and then if we right, we'll go positive, and vice versa. Banks don't enter like that. They have too much money on the line. Like a bank spread would be, fuck around, maybe 40, 50 million. Anybody trying to see 40, 50 million go down negative at first. So they don't trade with market execution like us. They trade in pending orders. And pending orders are so gangster because it's basically, let's say when it gets down here, I wanted to buy me in. So you can put in either what is that? Buy stop, and what's the other one? Matter of fact, shouldn't they show me? Let me see. Okay, yeah. Buy stop, sell stop, and buy limit, sell limit. And it's crazy because all that means is the sell stop just means that once you get here, sell me in. And the sell limit is once you get here, buy me in. So you might be able to like right here, if I put in a sell stop, I forget, I think it's a sell stop, right? Sell limit. Let's say I put a sell limit in right here. Once this comes right here and starts coming back down, they will get me in. I'll be in it on this play. So right now, I'm not in on this play, but if this comes up here and like when it crosses it up, it's not going to make me go into play because it's a sell limit. But so when it crosses this line and starts going back down, that's when it'll put me in the play. I cannot tell you how many plays I have trapped a trade where basically I go to a 4 hour. Let me see if I can find a good ass. Okay, here it is one right here. This is a kind of nice one. I'll find me a nice little consolidation area, something like this here, and I'll put a sell stop outside of here, a buy stop outside of here. Everything has stop losses, everything has TPs, and I got some alerts, and I'll come back and like right there, like right here, my sell stop would have been it would have hit. And so a lot of times, mind you, it can get a little tricky with wicks with this. So I don't recommend this all the time, but the cleaner you get a nice little consolidation, you can trap you a trade sometimes because it'll look something like this. I'll come over here and basically, let's see. I'm gonna put in what's the bottom right here? Oh shoot. Well, with the charts over here. I was trying to place it in right here, but the charts are already up here. So let me just go up here. Let's just say this was consolidation, whatever. I'll put my sell limit at the top of the little line. I'll put my buy limit at the bottom of the line, and then I kind of down here it shows you your stop loss and TPs and stuff like that. And I would you can drag it. It won't let you drag it when it ain't activated. So you would actually go in there and trade your stop loss. But a lot of times what I like to do with these stop losses is I'll just drag this boy, put modify, and then it gives me the line, and then I can drag the line to where I really want it. Because who knows the exact points? To get the exact points, you got to get the crossbar, come over here, zoom in. I don't do all that, so I'll go in this joker, hit stop loss, just make it move a little bit, then drag the screen drag it on here. So basically, without me looking, the trade would activate. The trade will protect me with a stop loss. The trade will take profit, and I'll get a notification on my phone once I'm in profit. So you can kind of have it automated. Now, it might seem like a lot of steps from somebody who's just first listening, but I can honestly tell you that I draw up my lines on Sunday. I'll draw up my trend lines, as I see a channel forming. And the only thing I really change throughout the week is my alerts and my lot size. That's the only thing I change throughout the week, my alerts and my lot size. I'm just moving my alerts. And my alerts are always probably either someone like this before a play, or if it's already a play, well, I have it like a little bit longer. I have one maybe over here, and one right here, and maybe one protecting me down here. Like, okay, if it turned around, holler at me right here. And then I go about my business. Like, I don't have a lot of, especially during the day, I don't have a lot of time to be at the charting computer no more. So I'll set up my play and put in some alerts to hit me if I'm gonna be on the road. I'll put in the stop loss. I don't use them all the time. Like when I'm live trading at the computer, I don't use the stop loss. But if I'm gonna be going somewhere, I recommend protecting yourself, either with the stop loss or a lot size that, if you happen to be wrong, you won't be tripping on. But you want to do that because, once again, whatever you do with this trade, do not jeopardize your ability to trade again. Because you just think about that play with Rowan at 4,000. Had he jeopardized his ability to trade again, he would have lost 300 and been sour and not able to get in. In his mind, he was like, okay, I'm only putting 100 in because I'm willing to risk this up to 5 times for the particular play. So he's not. He lost 3. He put another 100 in. And so you don't want to jeopardize your ability to trade again, because I cannot tell you how many times you find yourself getting frustrated with these charts, thinking that on your time is wicked out, it's about to go down, it's consolidating, and you'll just get frustrated because you didn't spend enough time on this shit. And so you'll go away, this and that, and come back and do what you wanted to do. No lie, it's almost as bad as losing. It's almost as bad as losing to come back where you have lost money and then the trade went your way. Because not only it makes you feel like you're not knowing what you're doing, you're just like, these boys taking me left and right. Like, I don't know what's going on. So you definitely want to be able to protect yourself with different stop losses when you're not there. When you're not there. So I'm going to make sure, and mind you, I'm going to check in with you. You can let me know how it's going, shoot some screenshots or whatever, or, just check in or whatever. If you just want if you ever just want like a check-in webinar, just let me know. You know what I'm saying? Zoom, and you're like, because a lot of people, they're like, all right, tell you what. I'm just going to tell you what I do. What's that?
I'm sorry, talking to my daughter.
Oh, okay.
Are you okay? Oh, yeah. Lay down, okay? Huh? Okay. Well, okay. I'm sorry.
No, that's no problem. There's no problem at all. It's funny. Kids wake up in the middle of the night, be asking for the weirdest things. I had my nieces over the other day. They woke up and was like, "Can we have some cheese?" They're like,
Cheese.
It's 3:30. I'm in the living room jamming my trap music, trading, and you done woke up talking about, "Can you have some cheese?" You don't get your ass back in the bed. But she came over here and sat on my lap for a while until she fell back to sleep. I put her ass right back in the bed and got back to it. And it's funny because I kind of maybe spent the night a little bit more just because I got trading at like 26. No, because I've been trading for a good 2 years. So, 27 just about then. So, right when I turned 27, when I started like trading and stuff like that, I'm 29, I'll be 30 in February. And like it's growing or whatever, but I'm sitting there like, man, can I imagine if I got this shit at 16? Oh my God. And it's been around. It's been around for ages. They'll tell your ass about 401 stock bonds and all that other extra other slow shit. But ain't nobody talking about Forex. When my friend brought it to me, I was doing eBay. I had a nice little eBay store selling stuff I got from the thrift on top of Methodist. And he came and showed me a $60 play. And I'm like, last month with eBay, sir, I made $1,000. So you and your little punk ass $60 and go away somewhere. I'll hear about it. And then one day he showed me another one. Like, yeah, today I have hit 400. So I was like, wait a minute. So yesterday you hit 60, today 4. What's going on? What's going on with that? And I joined the group. It's funny. I used to mute the group, and it's funny when the group is making the most noise. It's a lot of money being made. You know, like if it's just a here and there bump or whatever, it's cool. But if the group is making a lot of noise, it's a lot of money being made. And so I used to sit up there, and because I work second shift, and at 11 a.m. is when I would wake up to get ready to go. But if I used to wake up and boy, my bag secured, done for the day. I go, what? I gotta go to Methodist in 2 hours. Put on these clown shoes, get on this rail where everybody stank. Look at my manager. He looked like Carl Winslow. Like, man, like, I mean, the whole works. And I was like, you know, it just took for me trying, okay, well, man, this is some money. So let me follow them. That didn't work. Let me follow other traders. That didn't work. And it wasn't until I was like, I need to understand why they are making this move. Ro, how are you so sure your 100 is not going to be wiped? Number one, I'm not sure it won't be wiped, but I'm prepared for it. And also, because I know what my edge is, I'm looking for the strongest version of my edge. That's why that Euro play, as a matter of fact, the Euro play that's going on right now is so strong is because, you know, he had said, is that a pinball? And I went and looked and like, well, shit, it is a pinball. I know that's his edge, and my edge is with the channels. And I drew up my little channel. I was like, okay, well, shit, I can ride with you. And as a result, this is not my pair. This is a pair that's not my pair, and it's up $200. And like the session is like, it's fresh. So I estimate this joker has some room to go today. I mean, worst case scenario, I might close it before I go to sleep because this is not my pair and it's a Friday. So I might close it. Like if it go down like 150, 160, I might just take my losses and take a nap, you know. But for the most part, I'm gonna let this joker ride to at least down here. I'm expecting to. Matter of fact, let me cancel that stop loss before they get me. You know what I'm saying? Let me get this out of here. There we go. So if I ride the joker down to like close it over here or whatever, we're looking at about 289 or whatever, almost $300 on a pair that's not mine. And it's technically this. You see why it's hard to tell somebody, like, you have to tell people don't follow people trades until they get their own trading strategy. Then you can be like, now you can cheat the rules a little bit. Like you can kind of follow, but you can follow if it makes sense in your trading plan. If you can't interpret it what he said in your trading plan, fuck it. But if me, he, her, somebody say something and you kind of like, they might be on to something, go look at your chart. Whatever's been working for you, can you see it? If you can't see it, leave it be. And if you can see it, go ahead and trade it. You know, with the right risk management, make sure that your lot size is not too big, you know, that you're getting in or so. And like for me, like I told you with that 3-1 ratio, you know, you really want to get to the point where like, okay, I know what I'm risking. I know what my reward is. A lot of times for me, I like to get in at the edge because I know it's going to be at least 90 pips. So I know for a fact that I can risk 30 and get 90. And if it's like at 95, 105, then we put it on the trailing stop. So now I done risk 30 and that's at 115. You know, I done got an extra, what that is, 25 pips from what I was targeting, which is fantastic. You know, it's little ways like that you can kind of like dub up. You know, you can really like just dub up with little stuff like that, little trailing stops and knowing like this play, this is not my pair. I don't fuck with the Euro no more because it's slow and me and the cat got a good relationship going. But just because I got time today, roll time about this damn pinball, let me see. Oh, it is a pinball. It matches the channel. All right, bro, I'm holler at you. I'm holler at you. So and mind you know, it's little stuff like that, you know. So whenever you want to, because eventually you're gonna get to the point where you're trying and you be like, well, tell you what to it. Just watch me do this and tell me what you think. Whenever you want to do one of those, just let me know. You can share whatever, and just I'll be quiet and you draw it up and stuff like that. And I'm like, okay, cool. You know, look, this little stuff like that. Or if you want to, you know, if you do you draw up your support and resistance or something like that, your markups. If you just want to take a snapshot and just send it to my inbox, you can send it over to him. Like, oh yeah, that was live or whatever. You know, that's cool, whatever. Oh, why is that one why you got that one there? It kind of look like it's going through everything, not really respecting nothing, you know. And then you can tell me your reason why or whatever, because you might not be wrong or whatever. It's just difference of opinions and, you know, different stuff like that. So you got all these different little winning edges from different things people use to make bread. When you go into the demo, you want to try out different pairs, different winning edges, get to the point where this strategy, even though it's loose, it's getting you more blue screens. It might not be getting you exactly what you're looking for. It's getting you blue screens. You're getting positive pips and stuff like that. You know, once you get those positive pips, is trying to transition, and this is where a lot of people lose it right here. They doing good in the demo and they transition to the live, and the live keeps smacking that ass every time. And it will hit because this is not a numbers game. That's one of the reasons I love real estate. Real estate is just a numbers game. No matter what's going on, if I make 10 to 20 to 30 calls, I'm going to get a yes in between there. Not that way with trading. You can put 30 trades in and be wrong 30 times. It ain't gonna care. You know, that's why that's why I really like the comparison of them, is because trading can be my little drip. They give me 60 to a couple hundred a day. I can pull out or whatever. Real estate pays out every couple of weeks, but it pays out something large. So they kind of work within each other. And then my little software, it works where, you know, because with the chart, it's not on my time. So let's say, okay, well, shit, if I sell a piece of software, you know, okay, bet, a piece of software, 2 software, that's cool, whatever. So I have those little 3 working in between, and it helps me become a better trader, because when I was just trading and everything in my trading account was the light bill, like I used to look at it go down, like, damn, that's the light bill. I can't, man, that's the light bill. Like, you know, it hinders you from being free when you trade or whatever. A lot of people start trading with the right mentality, but with the wrong strategy. And then they get the right strategy, but have the wrong mentality. You know, because you know, when you first get in there, let it fly. I'm thinking stacks, marble dough, lags. I'm about to get in, it's about to go down, and then you get smacked and thrown around a little bit. So then you develop a strategy. Now you got the strategy part, but you ain't got the same mentality. Now you all cautious and shaky with the rifle and this and that. You want to compare yourself to a sniper. You're patient. You line it up. You wait for it, and when you see it, pull. Boom, next target. You know what I'm saying? You really want to consider yourself a sniper when you're doing a really good trade. And so you really want to consider that. And once you get that strategy, it starts to be like, okay, you're cautious, because, you know, humans, as when we experience pain, we're not quick to experience that pain again. Like I'm gonna send you a few books too, audio books, whatever, that you can read over time or whatever. My favorite trading psychology book is Trading in the Zone by Mark Douglas. It is an 8-hour audio book, but don't worry, because we're getting ready to do 20-minute book reviews where we get a blunt and we just talk about the book, you know, for 20 minutes or whatever, and break it down for the crew. So we don't got a name for it just yet, but we're going to do like really quick book reviews to kind of give the, you know, because I mean, shit, if you ain't got the time, 8 hours, but what? Right. And then I'm gonna tell you the saddest part. The first 2 hours ain't shit. Oh, I mean, fam, and they're talking about when a baby bump his head. Then he started talking about if you see a dog, you know, you get scared of the dog. Them first 2 hours of the audiobook is ass. I remember stopped looking at it, and I went back to the dude that recommended it. Like, bro, you sure? Because if he start talking about other stuff next, whatever, like astrology and unicorns and shit like that, I'm looking at you funny. He's like, trust me, you know, he takes a long way to get there, but when he gets there, you kind of see. And basically, you know, the whole book just breaks down to you understanding that you have emotional reaction to money and truly accept the risk. Yeah, we know the risk, but to accept the risk means that, okay, well, I was wrong. So what happens now? You know, a lot of times we like, it could go wrong, but it's most likely going to go up, so I ain't tripping. Like, think like, okay, well, it could be negative 45. So if my account had negative 45, what would that mean? That would, for me, it'd be mean 350. Okay, well, bet that's not bad. You know, if we did a percentage drop down, that's not bad at all. So I could just keep it grooving. You know, you want to envision that, really accept the risk. It's one thing to know the risk, but really accept the risk. So you'll get to the point where you come to the chart after you drawing it up, and you using whatever your edge is, pin bar, Bollinger, support and resistance, and you see what you're looking for, and you make the call. A lot of people say, well, how can you get in? How are you sure? We're only sure because this is our winning edge, and we know that if this trade is wrong, it's not nothing that's going to take us out of the loop. You know, like, it's like, okay, well, bet then. And for me personally, I have confidence I don't care about being wrong, because mind you, I have on my, I'm going to send you a picture of it too. It's on my wall in front of my trading computer. I have like a little poster board with like a whole bunch of, it's basically like a whole bunch of like things for me. Like I had wrote down everything that I was messing up on when it came to trading. And so then I kind of wrote like, I don't even know, maybe like 14 things down that just kind of tell me like, hey, you know, I don't even look at it all the time now, but it's nice to have it there, you know, just to know whatever. And it's stuff like, you know, have all broker accounts ready to trade. Remember, I said I have different accounts. So one account might be my bill paying account. Like this account right here, most of the time I take it out and I'm paying bills or baby and her brunch because she thinks it's a necessity. So mimosas, you know what I'm saying? She ain't trying to hit nothing else. So especially during the week, I'm up or whatever, at 3 or 4 o'clock in the morning and stuff. And so Saturdays, she ain't trying to hit trading clothes anyway. You better get your ass, go get some mimosas. She ain't trying to hit none of that other stuff with them. So you got that. I have stuff like know the risk, accept the risk, pair peak before entry. A lot of times too, we'll get caught up with getting to a pair. We ain't checked the news. We ain't did nothing. It's just moving in the direction super fast. And we get caught up in our emotions and sell. Oh, damn, it's turning around. Like, even if it's a quick move, breathe, go to a bigger time frame, trying to look at it up real fast. You ain't got to be long, 3 minutes max, whatever. Okay, you know what? It still got some legs to go. I'll get in here, but if it starts retracing here, I'll get out. I'll get out at this level. That's 40 pips. So let me go to my little cheat sheet and see with my $125 in my account. At what point will 40 pips not hurt? Maybe a 0.10, 0.05 bet, and just keep working that up, and just keep working that up until you get to the point. Well, I would recommend, like, you do that demo, you got that 50, you'll probably run through with maybe about 2 or 3 50s as you're getting over that emotional connection to money. And there's a lot of different little tools along the way to get over it. One tool for me is a lot of times I try to drag this guy down to like right here. And I play mind games with myself only by pips because I'm not trying to see the dollar amount because the dollar amount have I ain't a lot of dollar every time the whole time we've been on this thing. I promise I've been wanting to close at 2. My nature, like, bro, get up out of there. This ain't your pair. You at 200, bro. Be cool. But I remember before I got in this pair, I said, I think I can get a cool 90 pips off of this. So that's why a lot of times I play little mind tricks with myself by like, let me move the dollar part out, let me convert this guy from currency to points. So now I'm tracking it. I'm up 82 pips or whatever. And I used to do this like heavily at the beginning. Like I used to hate trading on the phone because all they show you is money. I was like, nah, let me get over here so I can see. And also you can trade from your phone primarily, but when you do your main top of the week pair peep, get to a computer and kind of get a broad's eye view of things, whatever. Because on your phone, you can trade. Like I do 80% of my trading from the phone. But I can tell you what led to that is from being able to, on Sunday, come over here, put it on the big screen or whatever. And it used to be to the point where I'll have maybe the 4 hour right here and the day here, just kind of looking at things and kind of, okay, I can see. Maybe I could do that. Maybe I could do this. And so, you have, and I'm just going through the stuff, whatever, you do your pair peep, you going through your winning edges. Maybe you like mine, maybe you like roll, maybe you find one that is the best of all of our versions or whatever, because mind you, all of these indicators work in some form of fashion. So you'll find one that just kind of, that, what, I like that one. You'll find it. You're going to test it out in the demo. Once your demo starts giving you consistent blues, that does not mean put 500 or 1,000 in your reel. Though you can trade that demo and reel all you want, but that real one, you get in your way in that real one. So you want to put 50 in. Hopefully, if you do only 0.01s, that 50 will last you through maybe 20, 30 fuck ups. $50, 20, 30 fuck ups. If you only use the 0.01s, I mean, that is just beautiful experience. You can't rent that nowhere else. Like 20, 30 plays only on $50 bad. Like you can do that with 50 or whatever. And the most important thing at this level is not the money, it's the pips. You want to get to the habit of, and it's funny because when I first started this and I had lost like a lot of bread going, I would be turned up over like $8. And my girl sitting up here like, dude, really? Like, you tripping. Like, this is the, and she used to, like, me and her, we used to go to eBay. We'd go to the thrift store. She would come with me, we'd be laughing and this and that, whatever. So she really liked going thrifting or whatever. We actually decided we're going to start doing it every now and then or whatever, because we used to find some crazy stuff or whatever and just have a good time, whatever. So she used to be like, you gave up our thrift time for this. This is boring. That's all this stuff on the chart. You made $8. Like, really? You sitting up here like, I'm telling her, it's like, baby, it's not that dollar. It's the fact that I'm getting comfortable in getting these 30 pips. If I get comfortable getting these 30 pips, I can have whatever I want. It's just the pips. So at the beginning, don't be afraid to use .01s and you'll have a .01 in, and you'll be at $2.71. You're like, oh man, that ain't shit. You're not putting it in perspective. That lot size for that is a beautiful play. That's an absolute beauty. If you could sting a few of those, $2, $2, whatever, you be like, okay. I'm getting the hang of getting 30 pips. When I see XYZ, I do this. And all of a sudden you start painting that narrative for you, how you're going to trade, your trade system or whatever. Because that's what it is. You doing that demo, get you them blues. You put $50 in, you play with them .01s. Really nothing more than .01s until you feel like you get into a habit of getting those 30 pips. And then what you'll do is slowly but surely scale your way up because you want to get yourself open and familiar to seeing stuff. Right now, I can't fathom having a trade in that's negative 600. But because I can't fathom having a negative 600 trade in, I can't have an $8,000 profit trade. And it's because I'm still working my way up to that. I can't see negative 600. I can't see that. Negative, oh, no, baby, I can't see it. But that's holding, you know. Ooh, I'm thinking about it now. -6. I had a -2 the other week that I thought I put the stop loss in. I did not put the stop loss in. I came back hurt. 250, 254. What did I do? And I could and me, I try to really stick to that. If I don't trade up 500, don't withdraw. And that I ain't gonna lie. Sometimes I break the rule. I ain't gonna lie. Sometimes like, hey, bro, don't get up out of there. But I don't want to jeopardize. I don't want whatever current Clint situation is to jeopardize trading Clint's next week does. So, because I used to do that sometimes, I'd be like, okay, Wednesday, I done lost like a couple trades. I got 200-300 in the account. Tell you what, bro, trade. I'm gonna try again next week. Let me take my 200 or 300 out, and I do XYZ with it or whatever. Then when the market's starting to move, I'm scrambling to deposit. I'm missing the play. I'm not ready for it. Like it just ain't worth it or whatever. So to slowly but surely go through that thing where demo and then you get comfortable. Then you go 50. When you get to 50, you're trying to do two things. You're trying to be comfortable with securing a number of pips. And then the thing you're trying to get comfortable with is seeing negative red and not losing your shit. It's psychological. It takes a little time to do it. And I can say that because I'm still working on it. That's why I told you, cut your losses and hold your winners. I'm sticking true to that myself. Like, hold your winners, B. Hold your winners a little bit longer to let them play out or so. But you start practicing with those there, and you're cutting your losses, you're holding your winners. And then all of a sudden, you see that you're down 40, but before you got into the play, you thought to yourself, my account, I don't mind being down 50 or whatever that breaks down to 30-some pips, and I'm going for this or whatever, maybe 100 pips or something like that. It gets to that 40, you cut your losses, no emotion. If he dies, he dies. You just cut it. And then at that time, you look at your chart and you say, okay, what the hell is going on here? If it's confusing you, that means you need to be a little bit more patient and wait. If you've been given a good wick or a good, whatever signal your indicator says, then you can plan accordingly. The dopest thing about Forex too, if you're really wrong, you finna be really right. Like on this play right here that I'm in or whatever. That's Bitcoin. That's CAD. What the hell you wrote? Hold on, Bitcoin. This ain't the right broker. There we go. Let's see, right here or whatever. If I was getting in and what was I gonna say about that one? Those are the lot size, location. Oh, damn it. I just like that too. I had lost my train of thought with that one. Just like that, boy. It happened like this sometimes. Just like that, it dipped out on me. It was with a lot size negative, the send of money negative, whatever, So you just really want to kind of, you can drag these two beforehand to kind of see what it'll be. So you'll get into a trade. You're like, I'm thinking this area right here, and negative 71. Ooh, negative 71. That lot size too big. I ain't gonna lie, it's been a couple times I got in and did that and be like, oh, nah, let me close it. So I'll close it negative $8 from the spread, and I'll put in a small trade. Do I rather lose 8 now or do I rather lose there? You have to, even though I'm thinking it's going down, when you enter a trade in your mind, you have to say, oh, if it did hit my stop loss, will I not trip? If the answer is I will trip, you need to lower your lot size. You need to lower your lot size until you're comfortable with that lot size. And that comes with experience, confidence, and equity in your account. So whenever you feel like it's making you a little too nervous, you're either over trading or you're not just being patient. So just go ahead and wait it out, take a look at it. And a couple of times you'll be kind of getting janked left and right. That's another time where you can use the group. Go in there and be like, hey, y'all, is this show looking like that or whatever? It works a lot. Matter of fact, today was a good one for me because I don't trade the euro like that. And I want to ask Ro, is this a Head and Shoulders pair? Because a Head and Shoulders, he said it is, even though it's a weird looking one. Like this would be the head, this would be the left shoulder. Normally the right shoulder comes up here, but the right shoulder down here. Like, damn, something wrong with him. So I was asking him, I was like, is that still a Head and Shoulders? Because the Head and Shoulders necessarily means it should be going down. And he was like, yeah, he dipping his shoulder, but yeah, that's a Head and Shoulders. So, it just, cross-referencing. Like after you get your trading strategy nicely together, you can use the group to cross-reference if you're right. You can use the group for random little plays. Like, you know what I'm saying? Like, and it's because I in the morning, I'm going to text Ron, like, bro, you made me $200 last night. He ain't getting a dime, but I'm going to tell him, bro, you made me $200 last night. He's like, bro, what happened? That pinball, bro. I took a chance at it and took a look at it. Yeah, so, let's say you're at the 50. You done got comfortable getting 30 pips using your edge. And if you're unsure, I promise I can give you, I think I've tried maybe like 9 different things. I can y'all them motherfuckers. Try them all, see if you work for you, whatever. That's roll, juice, or whatever. If you're unsure which way to go, I mean, you can look online and just damn near run into a different edge somebody's saying or whatever. But I'm going to list a bunch of them out there for you and be like, all these, give a look at it, take a look at it. Find which one works for you, because what you'll find out after you get comfortable getting those pips, you'll find out that you're getting doves and you're getting losses, but they're not necessarily tipping the favor in one way. Because that's the point I got to, where I had like one night, I had $327 on my play, and my car note was $303. I had just paid my car note, so I had just got my car note back. I'm turned. It's going down or whatever. And so next day I get into a trade and I lose like $230. I followed the same thing, so I thought, it lost me bread. I'm like, God damn, like, I'm making bread at times, but I am not consistently making bread. Like, I'm making bread where it's cool, but it can't pay no bills because it's not consistent. And that right there is when you start making your trading strategy come together. And that's when I'm going to bring up my trading strategy. And it's funny because after the trading strategy, the last step is you make that shit as simple as possible, as dumbed down as possible for you to understand, so that you can act fast, because you don't need nothing that's going to hinder you or give you trading paralysis. So this is my main trading plan right here. This is like, if I had to say, that little statement I gave you is my winning edge. I'm waiting for price to wick out at a support and resistance area, and I'm going to trade the channel. When I look at a chart, that sentence is in my head playing, and I'm looking for it. When I'm on Sundays, my trading strategy is basically like everything that compiles of what I'm looking for. And I'm gonna read it real fast and just kind of look at certain things. My overall goals of this trading plan is to use a simple, effective trading strategy. Supply and demand zones. Supply and demand zones ain't nothing but just different support and resistance. So don't let that term fool you. Supply and demand zone. I read a good ass supply and demand book that kind of helped me out with it, so I just call it supply and demand now. To secure my 3-1 winning edge. And like right here, I explained it right here. What does that mean? If I win 90 pips, I only risk 30. I can have 3 bad trades and 1 good trade and still break even. So I'm right 25% of the time, I'm good. No loss, no win. But for my edge, for this to remain my edge, it needs to come in between 40 and 60% accuracy. And I try to reevaluate every 20 trades, or at least at the end of the week. Sometimes I lose track. And if it was doing wrong, I ask myself a question. Was I fucking up, or was it really hitting me down? 9 times out of 10, it was me. Oh, well, I had made eggs and didn't have my volume on, or I had my headphones in at one time. Oh, my God, I went to sleep with the headphones in the computer and woke up to that boy saying it's going sideways. Like, oh, my goodness. Ooh.
I know you was hurt.
Oh, yeah. It was a wrap. The absolute wrap. It was a wrap. This year, hold on. No, damn it. Okay, maybe for next year. I was almost close saying this year I haven't been boosted, but I have been boosted this year. I've been boosted one time this year, and that's Ro was like, man, like I lost count how many times I got boosted, whatever. And so does that make one a better trader than another? No, because I can tell you for a fact that Ro's grows more than me in trading, and that's nothing more than being comfortable in your trading strategy. Whenever me and him link up and we'll talk about the little business or whatever, but every now and then I'm like, I'm saying, let me see what you got going on your chart. it just always makes me want to work harder to see that this dude made his decision in 3 minutes, 3 little old minutes. And I mean, at a dollar lot size, right now, I'm still having a hard time to factor in making such a call on a dollar lot size. Because once again, if we go to that chart, you know, that sword cut both ways. Fam be up 30, 40, 50 pips. But, you know, a quick little drawback, we talking negative 71. Like my account right now, I had worked it from, it was like 2 something. And earlier this week, I had it at 7. I drew some bread and had it at 2. I worked it up to 4. I'm looking to close today, maybe at 6. And you know, hopefully, it's Friday, so I might try to. Well, it's useless to kind of withdraw because I'm gonna get it to Wednesday anyway. So I might let it ride for the weekend since I already took out whatever. Unless I hit a mean ass lick, then I ain't tripping. I'll withdraw and just have a new payday on Wednesday, you know. But to be able to always keep that in your mind, you know, like, well, why is he so confident? Because he knows exactly what he's looking for. What if he's wrong? Well, his risk management is keeping him able to trade. And you can finesse that risk management shit as much as you want. You can get as technical as myself, which I'm like, I ain't gonna lie. I was using this chart heavy. Like now, I don't use this chart as much, whatever, because I only really trade the CAD. So I kind of got a feel on the days I'm in the 0.5 range, 0.25, and 0.50. And then sometimes just because I'm strange like that, I be doing random ass lots. Let me get a 0.32, you know, and it's like, wow.
0.32.
0.32, because I didn't want a 0.40, but I didn't want to go as low as 0.30, so I just picked something in the middle. You know, my account can sustain a 0.5 or 0.1, but I'm gonna go a little bit smaller because I just want to give me my little dub, get up. And if I'm up 40% on the trade, a lot of times I start like right at that point I start contemplating if I want to take profit or not. If I'm getting to go into the streets and do XYZ or whatever, I'm gonna take profit and just like I don't want to do that. But like tonight, you know, I'm letting it ride. It's at 47%, I want to say, and I'm letting it ride. Oh yeah, I took down my little indicator. Insert indicator and email drawdown alert. Top right. There we go. Yeah, so I'm up. That's up 50% profit. Like, okay, I'm still gonna let the Joker ride because I really feel like I get 250, 260 is in my future today. If it goes up more than that, you know, I'm gonna play a little future before I go to sleep. But other than that, you know, I'm just gonna let it ride. You know, let it do its thing. Go back to that good old trading strategy. Wrong thing. Yeah, so like, you know, I break down what I use, whatever. This came from a book and watching the guys, and this came from some cool YouTube video, and he was like, a lot of people, it was a dude with a terrible accent. That's another reason why we came up with Monetary too, because when you learn how to trade, the best info on YouTube is them 2-hour-long videos with Habib, and he talking low, and he telling me what you do this and this and that. And no knock on him, but fam, this is getting boring. I just got off the job. I really, you know what I'm saying? Like you just like with all that shit. I used to work that second shift and get off at 11. I got home and man, I used to be so mad at myself waking up like I didn't do nothing last night. You got off at 11. You got something to eat. You have to relax. Like, you know, it's okay, you know, to like damn whatever. But with that being said, I ain't got time to be listening to Habib going for an hour and a half whispering. You know, so that's why that's why we really want to like everything that's worthwhile to either we create or we can use whatever we want to kind of put it in a way that we not only understand, but we can kind of like, oh, that's cool. That didn't take long at all or whatever. Like when I got in a group and they would call your account, what's the name for it? Margin call. Margin call is basically when you have a trade that is so negative that they close it out for you and you either left with zero or you're left with $4 or $5. So they call that margin call or account drawdown 100%. Who the fuck knows what all that is when you first get in? But when you get in the group and they tell you Boosie badass hit you if you go down, you're like, oh, okay, that's Boosie. Like for the longest amount of time, I didn't know what drawdown was because of ROAS. Matter of fact, I didn't know what that was, nor top-down analysis was. Top-down analysis is basically when you go the bigger time frame and you draw up your stuff and you go down to a small time frame. That's called top-down analysis. Because everything we do is custom. When I got in the group, they say, yeah, bro, we call it walking it down, bro. Walk it down, bro. You know what I'm saying? We're gonna walk it on down and you'll be able to see. You know, so when I'm looking in the book and he's talking about the top-down analysis. I'm like, what is that? We never went over that. And then I look it up, I'm like, no, that's walking it down. You know what I'm saying? So the boost won't get you. And it's just so funny. Like, we really trying to just make it, more and more custom to us, for
Right.
because that should be man, that Astro FX book so boring. I recommend it. I don't recommend it first. I don't want to scare nobody off. But I recommend it, but it's a boring ass book. Yeah, it ain't no nice way to put it. It's a boring book. But it helped with a couple of things. But on this trading plan, and mind you, this is the one. Let me send that to you right now. Let me forward that to you. And I'm gonna send you this one, and I'm gonna send you a blank one too. So you can, kind of. It's a couple tools you can use at the beginning that you won't be using for good, but like they really come in handy because we made that one. Let me explain this one first. We'll go over. I told you I'd be jumping all over the place. I'm just getting so excited when it comes to trading shit sometimes. I have the time frames that I'm using. I'm using the week, day, and 4. I peep the month on Sundays. The sessions that I'm most likely to trade, I'm sometimes trading New York and London. I really don't mess with the other trading sessions a lot. I'm either getting in on the play between this time or getting out on the play around this time. Around 12, I'm making my calls for real estate and all other stuff. I'm not, honestly, it's rare for me to be trading after 9 a.m. these days. Like at 9 a.m., I should be looking to close profit or ride to the next day. So I'm looking to trade in this time. The indicators that I use, is my NPA, naked price action, my support and resistance swings, that's what my ladders, and alerts. Fucking alerts. Let me know when you get to that point that I was waiting on. Because, it's such a patience game when you like waiting for the channel, like you waiting for it to get to the edge of the channel. You're like, oh, today I just want to trade. You know what? Ain't nobody got time to be waiting for that. Here's what I'm going to do. I'm going to put me an alert in. And when you get over there, you holler at me because I'm not going to be looking at you all day to get answer the trade and stuff like that, So I'll do that. My pip goals, they actually changed. I used to target more pips, but these days I don't even target pips. I target ranges. So like more than anything, I'll be targeting this range and I'll risk a third of that movement. So like it might not even be 30 pips, it might be 50 pips, but that 50 pips is a third of the movement, which would be 150 pips. So I'm kind of trading in thirds right now when it comes to like risk management or whatever. So I'm always targeting at least 20 pips, give or take. I'm telling you, when I made this, I just put the CAD. I trade a few other things, but the CAD is my bread and butter. It really is though, because I've outside of Bitcoin, I made my most consistent bread on the CAD. When I started following, it was a little bit easier because it's on this side of the ocean, so it's over here. Over here we got USD, the CAD, Mexico, and like some Brazilian shit that we don't really mess with. And across the other seas, whatever, I got all like Euro, pound, and other shit. All that stuff is tied together because we live in America. I'll be more in the loop on CAD related stuff. Like I was saying earlier with the oil, like that wouldn't work in British because I wouldn't know what they oil is, this and that. But over here, all I got to do is drive past Kroger, all going up again. Oh damn, okay, well, because gas and all the tide, barrel of oil go up, gas go up. So okay, bet then. Let me go see if my CAD kind of shortened down or whatever. I'm always looking for minimum 5%. Like if it's a crazy rough day, I'll just take my 5% on that day and move forward. It says always pull 40, but if I'm actively watching, I'm loose with that one. But my daily max is 120, unless it's a Brexit or some shit happen. Because when Brexit happened, it's when the UK split away from the European Union in 2016. That's when I first got in the group. Dudes were making $7,000 that night. $7,000. That's no lie. That's really what made me say maybe I should take this little group I'm in serious. I mean, perhaps I maybe want to get the I think when I got in, I think it was like $100 or so. I was like maybe I want to take this serious because he just hit seven whole. The most I've seen in the group pulled out. Well, he shared one of the plays, which is like 20,000. But we used to have a guy. Well, he's still in the group. He just doing other things. There's a guy in the group named Trey. He's a lawyer, cool fellow, whatever. He trades whatever. He has a lot of disposable income, so he did some things. When Bitcoin was popping off, in the course of a week, he made $100,000 from trading Bitcoin. And he stopped sharing it with the group at 20, and he would just share it to roll. you know, and then when we all got linked up or whatever, you know, chopping up or whatever, he was like, "You mind if I show him?" I'm like, "What y'all showing me?" Like, "I don't try to see no gay shit. What's going on?" What's that? And he put out the phone or whatever, like, "Bro, that's a screenshot." You know, so then he showed me, to let me know that it was real, he showed me the screenshot from his email. When you withdraw from your broker, they send you an email letting you know what you withdrawed. And he showed me the thing, whatever, where he withdrawed 25 on this day, 30 on that day, and, you know, this and that, whatever. I think he had, mind you, because he was playing loose with us, so he ended up losing. You know, I think he may have lost max maybe 15, 20,000 here and there, whatever, just from gambling with that, whatever. But as far as like one time, whatever, that was the most I've seen somebody clear in a week, whatever. And for him, he was trading on the minute, and he was trading Bitcoin, and he was putting 5,000 in his account ago. You know, so it was like, I'm trying to tell you, fam was shooting. Fam was shooting. You know, that's funny. I told him, I said, "Boy, that lawyer bread give you some leg room, huh?" And he was like, "Man, you know," he said, "I'd rather lose 5 real fast or make 15." And I was like, "Well, shit, there you go." You know, and that was working for him. And you know, I mean, he's just doing. I mean, he's really opening up his own. He's in the process of opening up his own law firm. And plus, I need him to hurry up and do that because the brother gonna need. I told Roy, I said, "Bro, when I get on, I'm gonna need all the legal representation I can get. So I ain't mad at Trey not being in the group right now. You work on that law firm, buddy. You know, that's what you do because I'm gonna need it because I got an idea of just calling my lawyer and say, if I slap the shit out of him, how much is it gonna cost me? I need to be able to do that. You know, just tell me. You know, just okay, 12,000. Okay, Dick, we can do this. Come here, sir. You know, we can do that. You know. And then I have like a couple key rules that I'm always chopping up with myself about. 1 entry time per trade. Because basically, remember I told you I want to get in on the wick. Sometimes we'll get in on a trade with a small lot size, and as it goes down, we'll put in the bigger lot size because it's going. And as it's going down, you may put in the bigger lot size. Here's the thing: if it retraces, that biggest lot size is going to eat up them early profits the fastest. So you'll have a 0.10 that's up 100, then you'll put a 0.25 in and retrace. That 0.25 is at negative 115, and your positive play is at 80. So now you're looking at, you know, you done lost or whatever. So I like, even if I do multiple trades, I like to get in at one time to do it or so. You know, or maybe like if it hits a new resistance level, plays around and continue going down, I might get another entry there. So that works. But I try to do 1 entry time per trade. It could be as many entries and lots as you want, but I'm getting in right here. Of course, you know, the one I started off with, cut losses quick, hold winners. Like I'm trying to drill out one in, you know, crazy. Lot size and risk are always known before entering. No more, man, it's popping out. Let me grab my phone and get in and see what it do. Like I don't do that no more. If you don't have the time to peep, you don't have the time to trade. Just leave it at that. You know what I'm saying? Well, you know what? Damn, never mind. And if you want to say, well, I need to get quicker with my peeping, that's why you keep working on this stuff to get to the 3-minute peep. You know, because I'm trying to tell you, them boys 3-minute peep. You know, me, I'm a little bit more cautious, so I'll do a little bit more peeping or whatever. But I'm noticing how much that's starting to hold me back with stuff, so I'm trying to loosen up out of that, whatever. You know, it's just a little bit different because all this shit pays my bills, and my wife, you know, I have to make sure she's straight. You know, so now, especially when she come home and I'm in here kicking it away, baby. You know what I'm saying? Like, nah, if you come home from work and somebody is kicking it and he ain't got nothing when the stuff supposed to be had or this and that, like she ain't trying to hear that. And then she trying to go on the trip every couple months. I mean, I ain't mad at her, but I told her we went to Bahamas this year, and I said I could have swear I thought that bought me some months where we'll be good. And she went on the girls trip to Vegas. Matter of fact, last month we were supposed to go, but she was like, "Well, fine, then I'll go with my girls then since you don't want to go." And I'm like, "Nah, woman, give me a time." So with that being said, I got, you know, I'm a little bit more cautious with mine with it. But I will say that's the thing about real estate that I like is that, of course, it takes more money management because to get a bulk of bread in and not blow it or whatever. Because the first real estate deal, we went downtown, rolled talking sake bombs, and I like fried rice. Before I know it, I'm like, damn, that's what I came home with? Jesus, you know? Like, it was an evening out. Like, I know for a fact I shouldn't have did that. It's one of them situations where you got to hide the receipt from your wife. She can't see that. No, I ain't trying to explain those.
We're not going to talk about this one. Just stay here.
We're going to leave that alone, baby. We had a good time. That's all. We just had a good time. You know, also, too, is at the end of the week, not only am I looking at what's coming up next week, I'm actually looking up whatchamacallit, every 20 trades I make, is at least 12 correct. Now that's 60, that's really high. I ain't gonna lie to you. If it was at 40, I'll be content. You know what I'm saying? I'm like, okay, cool. If it's at 40 3 or 4 weeks in a row, I need to tighten some shit up, or maybe my trading strategy has a flaw that I haven't peaked just yet. But for the most part, I want my winning edge 40 to 60. It was 1 week, my winning percentage was at 87%. I mean, I was sitting there like, I know I shouldn't be overly excited because I don't know Forex, but I'm in this whole feeling like the man. 87%. I think I had it had to be maybe 1 or 2 bad trades the whole week, and I think the most I lost on one of them was like $17, and everything else was just killing me. And it's been some weeks. On my list, on my little rules in front of me, number 11 says 4 losing trades in a row, take a nap. You're done trading. That's one of my cardinal rules. Because mind you, if I'm right once out of 4 times, I'm breaking even. If I do 4 trades in a row and I'm off, I'm done trading for the day. That's like do. All right, go lay your ass down, get a rest, try that shit tomorrow because it definitely wasn't the day. It definitely wasn't the day. So I little rules like that my trading schedule, when I sit down and trade, is actually getting way more simpler. Do my little drops on Sunday, put my alerts in, trade from one end to the other end. But the things that compose it, is things that help me, keep it going or whatever. Like let my daily percentage target set my TP. I really don't even do this as often as I should anymore, but it's a good target for like over here. If you have maybe like, you say you got 100 in your account, you say that I want maybe 15% per trade or whatever. So I would let this daily percentage set my TP. So on day one, whatever my trade is, like $15, I need to find me a lot size that'll give me that 15 and be cool, and then the next day, 17, and you'll find yourself, you keep that going or whatever, it moves up or whatever. And see, for me, I'll do something like, okay, well, that's cool, but I want to trade with an average of 5 or almost 500 in my account. And now look at that, because this is 15%. Like this clearly adds up to more than that 500 I want to clear every week, and I'm going to do more than one trade. So that's the reason why. Oh, here's what I do. It took so long to get these Excel formulas right and this shit. I ain't trying to mess up nothing. Nothing at all. I'm trying to tell you. It took a while too. I was like, man, I did more Excel with monetary than I did in school. But I like it though. It works out. It helps me figure out what I'm doing or so. So you'll see. That's why I have 500 or so in my account, average or whatever, because I'm like, okay, I want to play at least 500 for the week, bare minimum 500 for the week. If I can do bare minimum 500 for the week, because that method is after taxes, my checks were like 1,100 or some shit like that. So if I do bare minimum 500 a week, I bring home methods. And if it gets popping more than that or something else pop off or whatever, it's better. So that's my rule, is like whatever happens, 500. If you don't make that 500, don't withdraw. You go hustle up somewhere else or whatever, And so it kind of is getting me into the habit of securing that a little bit more. You know what I'm saying? Getting it down. So I will let my percentage kind of set my target TP or kind of general rule a little bit. Lots are based on risk tolerance, not greed. And that's that whole shit again, which is, of course, I want 1,300. Of course, I want 1,300 and a 0.75. But my stop loss looks to be a 30, 40 pips. I can't risk 338. So while I would love that 1235, how about this, fella? We gonna set our lot size based on risk management, not greed. So my stop loss is about 30, 40 pips. Okay, well, 45 or 60 will do me well. So I can do a 0.10 or 0.15. On the same end, I'm looking at 180 to 271. While it ain't 13, my account, I can trade again. And if it's real, if it's real, do it again. Do it 180 again, do another one with it, and they add up. I promise, because me and Rose considered, talking trading strategy, and he's like, for him, he'll lose, and he'll stain. He said, but he said, I like the way you have it though. You got it like on the drip, where it's a little bit here, a little bit here, a little bit, then you stain or whatever. And it's funny because I'm like, well, shit, that's funny because I love the confidence you have when you punch a dollar lot on just saying fuck it. So it's like, man, you get the. I learned from him. Now he's learning from me. Now we learn from each other by vice versa. Doing that stuff in the group. I'm like, that right there alone to have black people where, black people always want to be the person to put your ass on something. You can't never put them on that. You know what I'm saying? I've been jamming him. Y'all just started jamming him. I put y'all on him ages ago. We do shit like that, whatever. So to be in the group where ain't nobody tripping on who put them on, long as we get put on. And I'm the first one to tell you, like, when people start like, because I've had people like they start, you start trading well, they start putting you on the pedestal and shit like that. No man should be on the pedestal. Number one, you know what I'm saying? Because everybody flawed, And number two, if you like anything that I'm doing, it's a combination of what people have put into me. And so, of course, I want to be, the contributing factor to put in for somebody else, whatever. And matter of fact, that's why I don't bring people into the group often, because I'll send you as the baby pips before I bring you in the group and make me look bad. You know what I'm saying? So I need you to go to baby pips, kind of bone up a little bit. We could chop it up, whatever. But when I bring people in the group, I want to bring eager people in that's eager to learn. And if you show them, okay, that's how it's working. Okay, let me make my own or whatever. So, I brought a few people in to do stuff like that. Just for that, I want to bring more people in that's going to be assets. Like when they learn their trading strategy, they're going to teach me something. Matter of fact, one of the persons I brought in the group, I don't even know what her name pops up as, because in my phone, let me see. Oh, I think she pops up as Jerry. In my phone, her name is Jazz, because that's my niece. And she has taught me more about candlestick recognition than anybody. And I brought her in the group, but I brought her in the group because I know her. She's like super extra. Like, okay, that's a candlestick. I need to go learn what all the candlesticks look like. So how do they move? Like, to this day, I be telling her, like, stop planning and start doing a little bit more, because sometimes she just kind of get trade paralysis when you analyzing so many different things and shit that you sitting there like, oh my God, like, shit, I don't know which way to go now. I used to have that problem too. That's why I don't like doing too many indicators. And I tell her, matter of fact, going back to the trading plan, whatever, this right here, if you ever find yourself getting to the point where you're planning too much and you're not taking trades, dumb it down and go back to IPDE. This is something that Ro taught me that helped me with my trading strategy a lot. Identify, predict, decide, execute. Step away from your trade. Win, lose, or draw. One of them boys be like, pencils down, pencils down. Identify. Ooh, okay, bitch kind of going down, kind of weak. Okay, predict. It look like it's going that way. I'm decided I'm going to get in right here with a stop loss. Then execute the trade. Get out the way. Like, if you find yourself doing too much studying or too much this and that, get out the way. You know what I'm saying? Get out of the way. Of course, I want my, back test. That's when, we went all the way back and you start looking. My TPs are the next highs and lows. Those are my ladder spots. A lot of times I try to ride from one ladder spot to the next ladder spot, and then I'll either take profit, or I might take profit, let it finish and get back in, or shit, I might have two open at the beginning, and once it gets to one resting pot, I close one, and then I let the other one ride. So it's like little different things you gotta play with and kind of mess around with a little bit. And then, of course, the last one is before you get in the trade, imagine what a winning exit looks like. What's a lose? You see, I don't even use losing exit. I use drawdown exit. What's a drawdown exit look like? And keep that in your mind, so when your trade goes -50, and before you get in the trade, you're like -50, the worst I want. You won't make those silly ass generalizations with yourself, because we plead with ourselves. You ever notice that after the trade is done, win, lose, or draw, you got perfect clarity? Hindsight 2020, you being like, I knew it was going up. See, I should have just met. But when you in the trade, you oh shit, like, now what does it look like to win? What does it look like to lose? Let me stick with that, whatever. Like, that's so important to have that in your mind already. So you won't, because if you have to make decisions during your trade, you're gonna lose. That money decision making, it just fucks your head up. But if you know beforehand that, if it do this, I do that. It do this, I do that. And you just move from there, it'll be beautiful. It'd be absolute beautiful. And then, I have a couple things that help me implement my trading strategy, which is check my news, trade reactions, not the news. There was that. Oh, something connect real fast. Top-down analysis, my IPDE, how many pips within target. That's when I use the little crossbar to see how many pips it is. That helps me figure out my risk and light. It's funny how it follows it. How many pips within target? Then the next one says find risk and light, because they come right after each other. How many pips? 230? How many pips I'm willing to risk? What's the last resting spot? Ooh, let's say 60. I risk 60 for 260. What lot size can sustain that with my account? And then we do the whole little thing, whatever. And then that's where it's at. Trading when it's arriving or departing. That's my whole trading from the ladders and stuff like that. Don't rush it. Be a trade sniper. See it, trade it, keep it moving. The trade journal, even though I really don't keep it as like I should or whatever, but I try to, for the most part, kind of remember, or I'll sit down and like look at my past trades and kind of like decide whatever. You want that so you can accurately judge if this edge is working, because you can't really judge if an edge is working until you really feel like a good week or two in. Shit, sometimes more than that, depending on if you're not doing it right, because you'll be working the edge 75% accurate, and you thinking the edge is trash, but you just not doing the last step of it. You know, you're not doing this and that part. You miss one, you can kind of come crumbling down. And then, you know, you got your alerts, risk management, remember why you entered, you know, do the work or don't trade. You know, that's the stuff we was talking about or whatever. So you have all the stuff that we talked about, you know, with the chart and the back testing, then going in your demo and trying little shit, then, you know, thinking about your trading strategy with alerts and stuff like that. And mind you, I would gladly help you come up with a trading strategy as you figure out which ones you want, whatever, kind of put it into words, because you really want to, you know you have a trading strategy when the time that it takes an elevator to go from floor 1 to floor 3, you can tell somebody what your winning edge is. That's why I put my winning edge on a sticky note, because for a long time I couldn't shit, when the hell go this way, I do that. I couldn't really put it in the words. And then I was like, well, let me go ahead and try whatever. So I wait for price patience to wick out, you know, so at a major support and resistance area and trade the channel. Like, simple. I could tell you, you know, as soon as we get in the elevator, I can tell you that real quick. Rolls are simple as well. On a bigger time frame, I wait for a pinball or a major rejection. Like, you know, simple. You know, like, really? Like, and then they be asking, well, like, bro, so what are you doing? Like, I know I got to be more complicated than that. And, like, I ain't gonna lie, I told him, bro, you used to piss me off talking about pinball. My nigga, what else? You doing something else here, because I see the pinball. I don't got the same feeling. And we want to overcomplicate it because we think it's more complicated than that. You learn all these rules so you can know how to react in your environment, control your emotions beforehand, because it's not a job or whatever. So all the rules and policies and shit you create. So you create all this shit just to be able to confidently get down to 1 or 2 sentences and one thing you're looking for. So and then when you're looking for a trade, you have your trading strategy in your mind. You have your rules thinking about. But when you're looking for a trade, you ain't thinking about all this shit. Like, all this right here, this is cool, and like I try to look at it before I trade, before the trading session is. But when I'm trading, I'm thinking about, I'm waiting for my price to wick out of the major support and resistance area and trade the channel. I know for a fact I'm gonna trade it with risk management. I know for a fact that I'm gonna make sure my alerts are set. If I'm going to sleep, I'm gonna do it with a stop loss, a TP. And really, honestly, like, shit, that's really most of it right there. That's it, bro. Yeah, really, I do that little thing now. That and bam, and just have it there ready to go, and just after 20 trades, evaluate, you know. Or if somebody else started showing a different way to trade, and it look like, yeah, that's a little bit easier. Let me try that in my demo for a week. And if my demo trades make more than my real trades, I might end up switching. I ain't gonna lie, I've done that a few times where I've seen somebody have a winning strategy. Like Jazz, my niece in the group, she's always like finding new strategies, and I'm telling her, like, girl, pick one and just try for a couple times. Because, you know, this one has this one. I don't know if I want to try this one, that one. And like recently, I just came to the conclusion that all indicators basically derive from the same thing, which is price, and they all kind of work depending on the level. I just came to that conclusion. So I'm saying, it's like, you know, all these hoes work depending on how you work. Like, all these hoes work. So find one that's most comfortable with you, your lifestyle and personality, and work. You know what I'm saying? Work that joker backwards or so. If you're unsure exactly where to start, you know, I'd recommend, you know, you get your baby pips, you try any pair, go in the demo, and you'll say, you know, all right, well, worst case scenarios, just start, you know, maybe you want to just start doing channels, because I don't think I properly displayed a channel earlier. So let me properly display a channel, just to, like, you know, channels is the 2 trend lines. You know, that's all it is, whatever. The 2 trend lines. You look up this one. Imagine this one's going down, so the top one can't intersect nothing, but the bottom one can, as long as it's parallel. You know, so, you know, and so you have your channel. There we go. Yeah, your channel. There we go. And see, I ain't gonna lie, for my channel, I just kind of like it to, like, you know, rest on a few points. If I have one outside of it like that, I ain't tripping. So this would be a good channel for me. And then, you know, I trade the channel, you know, so I'll trade within the channel, you know, a little bit here and there. This one's a little bit different because this channel is coming from a consolidation a little bit. So, like, right, you would have traded it down, but trading it up right here, that actually would have been a little bit painful. You know what I'm saying? That wouldn't even if you would have traded up right here and stayed in and with all that, it would have still only been right there. So you really want to get it, you know, when that trade, like, if it was Well, I need a better one. Oh, that's one right there. I'm tripping. That's one. It's an uptrend one right here. So when you're doing an uptrend, the bottom line has to be level. It can't be like cheating and shit. Let me zoom out a little bit. Ooh, that's ugly. I'll let you know. The cool part too, while we've been doing this whole thing, you'll think, well, if you did this and that, whatever, you must have not been able to trade tonight. Luckily for me, I was able to get my trade early, and I just been sitting in the same trade the whole end of the session. And it's been around 200 or so. I'm still expecting my push because it ain't on my time, but I got my alerts if it start wicked, if it start doing something silly. Let's see. So I'm gonna show you, something like that with a. You really want that channel to really be parallel, something like that, whatever. And you'll find yourself like this is a day chart. I probably want on the 4. But those channels are nothing but just trend lines, top to bottom, and you find a little spot. So riding them boys up and down, right up, down, out of consolidation. Oh, and one of my favorite things to do too is that you'll find out like you can almost in any market you can really like trade up or whatever. The CAD. Matter of fact, this is the euro. The CAD last year around like November, October, it provided me with some of the most safest trading I've ever had. And matter of fact, I bet I can find it in a week. I know I can. And if I don't find it on a week or whatever, I'll just find something similar to it on the week chart. Bet, here's a good one right here. So you looking at this right now, and this don't look like no trade, huh? This is sideways. We should be waiting right here, right? Like it's no trade. This is the week chart. Let's go down to, matter of fact, let me give it the square so I know where it's at. Now let's go down to the 4 hour and look at this shit. Where did it go? There you go. Let's zoom out. Let's make that a little bit smaller. Let's zoom out a little bit. So this is that consolidation that it had with these two lines and this little thing right here. This is the consolidation it had on the week. On the week chart, it showed consolidation where we couldn't trade, but a good week consolidation on the 4 hour will be some of the safest trading zones you'll ever have. Because that was consolidation when we couldn't trade, but when you go to the 4 hour thing, you could trade that joker here. Let's see how many pips this is. I'm talking safe pips too. Like what? Okay, bam. 261 pips. Bam, down. What's that? 229 pips. So it's almost a 200 swing pip every time while we're technically in a consolidation. And that's just because it got trapped in the consolidation for more than a few weeks, kind of going up and down. And you really would like a nice little, like this one right here, this would have been a perfect little consolidation to trade. So whenever you have a chart on the week that's not giving you a trend, you said like this one giving us a trend. So I was riding it up early and I took my profits because I thought it should be wicking out. I might get back in if it can sustain this motion and ride it up to this level over here. But if you get in this on the week chart when you're doing your top-down analysis and you don't see a downtrend or uptrend, you see a lot of consolidation on the week of the month, that's not a bad thing. Go down to a smaller level and find you a support and resistance area and like a bumper call, boom, 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 trade it. And eventually, this is what'll happen. You trade it down, you'll trade it up, and you'll get, like right here, you might be trading it down, right? And then you'll take a loss with a TP, stop loss got you, or maybe you don't know enough to, get out at that wick. But like, I ain't gonna lie, I knew I wouldn't have got out that wick. When it wicked out here, I would have been expecting this, so I wouldn't have got out right here. My stop loss would have took me out. And then right here, you'll see this a lot, is that whenever it breaks out of a consolidation, when it breaks out, this ain't the time to get in. After this, guys, the time to get in. You want it to be tested again. So like he broke this line. That ain't the time to get in. Let me see if this line gets tested again. And this line got tested again, and right here it showed us true colors. Like right here, somewhere in this candle would have been the time to get back in. So like on the CAD play, when I was riding it, I rode it for maybe 3 or 4 weeks, up, down. I mean, it was killing. It was living my best life. It was a good trade, easy trade, smooth trades. I mean, and then when it broke, of course, I lost money when it took my stop loss. I waited, and you'll be able to get in somewhere right here and ride it to its next high point. And that's all you have to do. Just ride it to its next high point. Just keep riding until you get a point that starts to go down or whatever. And see, you would have rolled it somewhere like either rode it right here, then like as it started consolidating, got out, or you want to ride it until it started going down, and right between here you would have got out. So you still would have got out somewhere between here and there or whatever. But that's just little ways where you can find yourself like, okay, I'm patient. I'm a sniper, so I'm not gonna rush it. But using a little bit more strategy, here it is on a bigger time frame that is consolidating during the week. Let me go down to my 4 or my hour. ROAS go down to the hour sometimes, and I ain't gonna lie. Mind you, I told you I'm a little cautious. I'm trying to be a bit bolder and braver and do a little bit. But I'm going to the 4. The 1 hour, I done lost too much money on the 1 hour playing games with me, so I go to the 4. The day, every now and then I might peek over the 1. You see, since we've been on, I only looked at the minute. I looked at the minute, and like the rest of these, I've been over here because these bigger time frames, they reflect more information, so they can tell more of a story. So that you'll find yourself with some good trades like that. And I'm not even gonna lie to like I don't recommend it when you first beginning because you really need to get comfortable with a pair. But I ain't gonna lie, sometimes if my pair is dead or ain't moving or nothing, I'm getting to the point where I'm supposed to be waiting and I'm getting anxious. I'll mess around. I do it with small lots, of course, but I'll mess around and pull up a couple pairs, you know what I'm saying, and see if any one of these boys in a weak consolidation. So I know that's gonna be some good safe trading for me. Like okay, let me see. Okay, kind of a little bit with the yen, it's a little sideways, but not necessarily. I really want me a nice little clean consolidation, You won't find it all the time, but let's say we couldn't see none of this shit to the right except for this. And I came over there and seen this guy going sideways, this is perfect. Even though they have these wicks, I'd find a line that crosses both wicks, probably this line right here that's already on there, and that line right there. Then we go down to the 4 hour, which you will find just excellent trading levels. You know what I'm saying? Just another example. Because it'd be some good. It'd be some. I ain't gonna lie. The big trades they feel live and stuff like that. But you really want to feel good in some trades. Have a trade where it's like, man, I am kicking blue screens ass. Like 60, 80, 70 here, whatever, and just like that. See this little consolidation. Wherever it started at. So wherever it started right there, you roll it from there to there. You could have rolled it here to here. And then the thing about it is too is that when you're riding up, you're going to get past 50% of the area. After 50% of the area, you got to kind of consider like what's going on, So like right here, I think I had the thing a little too high or whatever. So the actual line probably on the smaller time frame would be like right here. So I'd be riding here to here, and right here, this could have got you. You could have got in right here and right here got out, or you could trust the system and stayed in a little bit. Right here, knowing me, I probably would have stayed in because I got in on the wick. But if I did get out right here and seen that it started consolidating again, okay, bet, let me get in there. And it's just so many different ways to trap you or play once you kind of start figuring out, okay, here's what I'm looking for. I think the biggest part, though, is getting past you have to get past the emotional part about money. You have to learn, a little money management just to know that, okay, I need to not jeopardize my next time. Realize how compound interest work, which is just money and time equal more money. And so, that's all it is. Money plus time equals more money for compound interest. And the same things with, with charts for the most part. You hold your winners, they're more likely to be more winners. You cut your losses, you're doing good or whatever. So getting that understood is a hell of an obstacle for folks with that emotional part. You want to get your basics down, which is really the first 2, I ain't gonna lie, 2 or 3 chapters on baby pips would probably do you. I did 31 because I was bouncing around just that. The first 2 or 3 give you all the most basic shit you need. Pips, currency pairs, how to read the candle, trading sessions, do random stuff. Then at that point, you go in your demo and it's a free-for-all, different pairs. I'm trying to pinball. I'm trying to moving averages. I'm trying to Bollinger. I'm trying all of them at once. I'm trying none at once. I'm trying 6 pairs at once, 1 pair. You just get all that thugness out your system in your demo. get your thug out in your demo. That's where you get your thug out. And you do our whole thing. And then while you're in that demo practicing and this and that, that's when you really start seeing that I'm finding and trying my winning edges. Okay, back testing and verifying that this works. Bet. So let me go ahead and try it in the real. And if my real starts giving me money, okay, it looks like I'm building my trading system. Now let me put this on paper, where I have all my rules that I'm looking for, something like this, where I can read, maybe I read Sundays just to refresh myself. Then, after I got out, because this is really like, this is the rules for my trading strategy. And within it, I have that little statement. You want to do all that extra shit just to get to the point where you can get to the chart, thinking about your winning edge before you even get to the chart. You're thinking about your winning edge. When you get to the chart and you lay it on there and say, "Where's my winning edge?" There it is. Then you execute. Hit the play, pull out and go again. And just dumb it down like as much as possible. When it starts working, dumb it down. When it starts working, it's not the time to make it more complicated. Dumb it down and increase your lot size. Because I ain't gonna lie, that's what I'm trying to do right now is dumb it down, increase my lot size, be a little bit more patient. And that's what I told you I love right about real estate, because the last couple of plays, don't get me wrong, I play catch up a little bit, this and that, whatever. My mama needed a damn roof. I'm like, how you don't need a roof when I had a player with her? I'm grateful to be able to give her a roof, but still, I'm like, okay. Man, I'm like, okay, so I had to get caught up with a few things with real estate, but that's one thing that I can't wait for, because my ultimate goal with trading, here's my ultimate goal with trading, is that turns out I can do a 5% trade. I can bust a 5% trade in my sleep. 5% I can get. Now 5% at 500, that's 25. That ain't 500 a week. You know what I'm saying? Like, I need my 500 a week. Baby needs that 500 a week. Brunch needs that 500 a week. So that ain't 500 a week. My ultimate goal from real estate is to get $20,000 in my trading account and trade 5%. 5% would have me at least $1,000 a day of trading. At least $1,000 a day or 20,000. So that's right now I'm trying to, right now I'm getting in the habit to see my trades negative 400, because I ain't gonna lie to you, I can, negative one something got me shaking. But negative 4 and 5, I can't fathom it. And I need to be able to fathom it to get to these bigger profits. But I'm like, bro, I don't know, fam. You know what I'm saying? Internet bill up around. Let me just get my 200. I'll be all right. Shit, 203 times $600. I'll be good with that. But I want to continue growing on my trade journey, so I'm learning how to loosen up and be more brave and confident. And I noticed that for me for me to be bold, I need to just go ahead and have more bulk equity in that hole, so I can go ahead and just swing. Right now I limit my swings because I know I need to be able to come back at it again. But that's my ultimate goal. So after you get a trading strategy and you kind of grooving and stuff like that in your trade, get to the point where you start thinking about, so what is my goal for trade? What is the goal for this? I just want to have enough bread where it covers this bill or it covers that. Like for me, I needed to, before I quit, I had needed to see trade pay rent. I need to see you pay rent. Like, show me you could pay rent, not on some fluky, but show me you can pay rent 3 times in a row. Can you do that for me, trading? If you could do that for me, you listen to that. So that was the goal. Like, let me see if trading will pay that, whatever. And it did. It did, from steady, slowly but surely working or so. And I was like, okay, I can do this from the house, bet. Like, all right, so let me, then after that, it's just been putting a little bit more work in, learning, and trade. Even when I know a lot of people, they think, so I'm past the demo stage, so I don't got the demo. I always trade, even if, like, okay, well, bread's tight and you hit on a play and you took all your bread out, because sometimes we do that shit. And okay, well, I'm tight right now, so I can't put nothing else in there. Go to your demo, more shots up, get more comfortable with your pair, staying in tune with your pair too. Because I ain't gonna lie, I know when the cat sneezes. If the cat sneezes, bless you, I'm on it or whatever. This is the pair that I have claimed. Good Lord, the dragon looks to be falling. Ooh. I was just randomly looking at pairs. Ooh. Mind you, I drew these lines up on this ages ago. So now I randomly click to my pair, and what I see right here, wicks out right here, starting to go down. So this is an instant, and so you see how, like, you peek beforehand. I already had my lines drawn up from past Sunday. So now that I'm typing up with you, and I randomly see that it's like that. So I'm gonna get in. For this account, I have it basically set up right now where I know for a fact that anything less than a 0.30 is safe. So I can kind of do it as I see fit or whatever, and kind of adjust to it or whatever. Where's one click trade? So for this one, because it is 4 o'clock halfway through the session or whatever, but I expect this joker to go down to at least this line where it last week out, or even down here if it really start moving. So I'm gonna put me a nice little 0.15. I'm gonna sell and because I will be going to sleep, so I'm gonna put a nice little TP down there. I want to make an alert here, and I want to put a stop loss, probably like at the last little resting area right there. And you see like the space between that one and the space between that one, it's huge. It's a great difference. If the space between these two were different, that's kind of a rough trade. You're risking as much as you can win. That won't get you breaking in, you know. But if I'm only risking that to get that, even if I lose that 3 or 4 times, hitting this one time is going to erase that. So I'm in on that joker just because I saw what I need to look at real fast, and bam. And it's crazy because now I'm starting to look at it. Ooh, look at this on the. I go to a bigger time frame and look at how many times this line has been respected. It went up here, wicked out. Oh man, I'm trying to tell you, put some respect on his name. You know what I'm saying? Some respect on his name. That's what that is. And so you come over to the spot, and no lie, after you get to the point where it's like working, you will find out it is almost that easy. Because I know sometimes we get this part where I know for me, because I can only speak from my experiences. I got to the point where, you know, I just start feeling a little intimidated. I'm getting in the group and I'm getting confused, and I'm watching, you know, rolling the guys clean up bread and stuff like that. I'm like, how are you looking at this shit so fast? Whatever, you know, this and that. But, you know, it just was because I'm getting my shots up. I'm getting more comfortable. Then you get to the point where you're like, we click. I noticed this maybe 2 seconds, not 2 seconds, but maybe a minute or two, and I got in the trade, and I'm comfortable whichever way this is riding out. And that's what you really want to do. You really want to be able to, like I set this up Sunday, and I wasn't even looking at it. Like, I don't think I was looking at it as the Euro and the CAD. Because the CAD's going to play in the Euro because roll card or whatever. I wasn't even looking at the Dragon today, even though I still trade the Dragon. These pairs right here, you see how clean it is over here? Like, I don't have all of them. Like, these are all the signals. I'm not doing shit with them. Why I need to look at them? I'm nothing with them. I got my CAD, which probably needs to be up here. The Euro. Moochie pair is the yen, and every now and then I like to see what he's doing on it. And I trade the pound sometimes. And I think these are just some pairs I had checked out because I was bored one night. CAD wasn't moving. I just wanted to try something different, whatever. But you know, because you really want to clear it up, make it simple, get all that shit out your way. So when you look at a chart, the only thing you should be looking for is your winning edge. And as soon as I got to this chart, all that shit that we talked about, while it was in my mind considered, it wicked out at a major part. Like every time I get in a trade, I can literally go back and say, okay, I waited for price to wick out at a major support and resistance area, and I trade in the channel or whatever. Okay, well, even though 4 hour, it was already wicked out, but go over to the day. Okay, this is a major area. It wicked out. Let me go ahead and trade down. If we zoom out, look at all this shit. Jesus. I ain't gonna lie, every now and then you gotta go ahead and delete some of this crap. You know, it'd be a lot of stuff over on your chart. Okay, there it is right there. And it's the Fibonacci right here. Let me get the Fibonacci out of here. What you doing over here? There you go. See right here, that's at the top. Move it there. So you'll find out. And mind you, I didn't even do this before I got in the trade because I was comfortable enough to get in on the wick, whatever. But it turns out, not only did I get in when price wick at a major support and resistance area, but now that I'm drawing up the channel, look who's trading at the edge of the channel. And that's what I like to do, trade at the edge of the channel for the most. So, like, this is a good trade. This is it's funny. You see how it's, I mean, really though, what other way can you say it, but I just looked up into this trade? Like, really, because, I mean, I drew it up on Sunday, which was, today's Friday. I drew it up Sunday. I haven't paid a trade on the Dragon all week, and just happened to, you know, draw it up and get to it. You get to the point where on Sundays you draw up 3 or 4 charts and put a few alerts in, and just whenever you feel like, go through it and see if you see your edge. If you don't see your edge, go with it. You know, just dip out. And the spread is already 8, you know, because the spread for this one is 7 pips. So we're at negative 0.6 pips, whatever. That's good. That's for the break even. That'll be great, you know. So now I was content with this night ending at 260. It might even go more than that because I've added another position on, you know. And also something else to realize when you start making these things or whatever, don't forget that these lot sizes add up. Sometimes we'll pay 0.5, 0.10. Right now, my account is holding a 0.40 lot size or whatever. And that's why this little indicator thing right here that I use is so helpful, because it has the symbol margin call, which is basically, it would have to go down 152 pips for this trade to wipe my account. I'm targeting, what is this? I'm targeting 216 pips this way, and my risk management is, where did it go? Is that it? It's 35 pips, because, you know, it's hilarious how I didn't even look at it, but I know for a fact most times I'm risking 30 to get 90 or more. And it gets to the point where you do all this stuff at first, but you just start it starts like getting like muscle memory.
Habitual.
Yeah, it really is. Because you get used to it. That's why I really recommend people to take your time and get familiar with one pair for one time. Then after that, you can just free ball. You know what I'm saying? Pair here, pair there, this and that, because you kind of got into the system of it. But it really does, like, it starts sinking in and getting a little bit more mental. And we got things to help you before it gets like all the way mental. A lot of people don't utilize this. Whenever you over in Telegram on a computer, you click monetary financial. It works on the phone too, but on the computer you can really get to it. It has everything in here, including the files. And these files,
Yes, those books. Was it you that posted that? I think it was one group on there that had the multiple books on investing.
Yeah.
I pulled a few books from there that I started reading.
I'm trying to tell you, like, this is my saved message, so you're gonna see a whole bunch of little crazy shit over here. But look at all the books I took from over there. You know what I'm saying? Like, and it's funny. I'm gonna read them eventually, hopefully. But I love that free books, and monetary. We have a library too now. I just started. I mean, they gave me the idea, so I'm like, yeah, monetary can get a link, a library too. So where's the share link? I feel like I shared it. There it is. And like, and mind you, we have a update coming for the website soon. We actually going to go on the special to get a few more folks in, get some new energy and whatnot. And we're going to be redoing the website, a total rehaul, because the website works fantastic on the computer. On the phone, not so much. It's just because there's so much shit on there or whatever. But like, we're going to have everything like located on there, including like it'll be the book, where you can click the book, and then you can click the link to the YouTube where we breaking it down in 20 minutes over a blunt. Just like, and so what fam is really telling you, bro, you got to put your money to work. Little stuff like 20 minutes, all it's going to take. Roll you a square, have one with us in 20 minutes, you'll be all right, And so like we got our own little library that we kind of, put together with, of course, it ain't hollering at these boys. Cause I mean, I lost count. What they at? I know they had a Trader's Library. I don't lost count. These boys is amazing. That many books for the free 99. Yeah, but over in here, with those files, there's a few things, and they're probably a little bit down because I ain't used them in a long time. Let's see. Is the monetary cheat sheet? If you ever like unsure where that's at, it's on the website in the members area, and we have it saved in here. Books, magazines. Oh yeah, I forgot. I'm supposed to be dropping magazines in the group every month, business magazines, but I need to get on that. And nobody, the guys didn't remind me. Okay, this is a trading pan template in here from February. Let's see what that opens up. It's another one too that we made. That's called Daily Parapeep that helps out. As you can tell, I got all this stuff open down here, so every now and then it slow down. I'm about to say, I know you a lot. What is it? Huh.
After this one, we may have to call it a night. I don't want to fall asleep on you.
Okay, that's cool.
I wasn't fortunate enough to have an evening nap. I've been like over 24 hours now.
Woo, girl, you've been going. But I tell you what though, you've been going for 24 hours. 24 hours, just up and this and that, whatever. That's the livest part about trading. You imagine 24 hours with just trading? Oh my God. You know what I'm saying?
Right. Exactly. The possibility, the potential. That's what I love about it. And like you've been saying multiple times, how successful you are depends on how hard you work. So you really want to get that thing, get it, you're going to do what you got to do to get it.
Get them shots up and try. I got a buddy that comes over and he wants to trade. He wants to be a profitable trader so bad. But I asked him simple stuff like, well, did you trade this week? How many times did you trade this week? Oh, bro, I ain't really get to it all the way like I wanted to, but I this and that with her. I'm like, oh, fam, like you ain't letting me down. You letting yourself down. I don't care.
Right.
That's where I'm gonna be at. I'm gonna be trading. So Okay, I'm not sure why they're not opening up here, but I'm gonna send you like these little blank templates or whatever to take a look at. One of them is called a daily parapet, and it just like before every trading session, it helps you kind of get into the groove of what you're looking for during that session. So it's a few things that you'll be able to use like that. Uh, well, I tell you what, then here's what I'm thinking. Whenever you want to, no charge on no charge on that one. Whenever you want to, of course I'm gonna give you a little homework and stuff like that and stuff. Whenever you want to either say, well, let me see, tell me what you think about this, or if you say, well, can we recap this because I had this and that, whatever. Just let me know. London session Tuesday, Wednesday, Thursday. I'm up to at least 4 o'clock. And after 6, I'm typically free unless me and the wife are doing something or whatever. Because she gets off around 3, and so usually I try to wrap up everything I'm doing around 3, and me and her keep it for a few hours. Then I'll get back to work, unless it's like one of the nights, we just kicking or whatever. So I'll be all the way tied up to like 9 or 10. But for the most part, any day after midnight, I'm free. I'll sleep around midnight. I'm always up around midnight. Some even nights I want to go to sleep, I'm up around midnight. Trading. Yeah. Oh boy.
Okay, but yeah, that sounds good. I'm gonna start. There was a lot of information that you gave me, so I'm gonna process it. I don't want you to think like I wasn't listening or anything because I didn't really ask questions. I'm just the type of person when I get information, I listen, I study it myself, and then I come back with questions.
Hey,
So,
that's the best way. You know what I'm saying? Teach
right.
me all the time. Like, don't be taking notes, this, that, listen, and I recorded it for you, so I'm gonna send it over there to you. And I really love when people come back with questions because when people say, okay, I got you, and they'll come back with none, it's like, okay, you're supposed to, like right now, I'm expecting you to come back, okay, this is working, but so why is this not doing that if it's this? And then we can kind of get into more situational stuff and stuff like that, kind of tailoring a little bit more and stuff. So by all means, if you need doing the wave, like what was such and such again or something like that, let me know. We have a webinar tomorrow at 6 p.m. too. In the webinar, feel free to ask any questions or so, or compare, what I've said or whatever to some of the stuff that other people have said, whatever. I mean, one guy, we had a trading session, and the next day he went and got a trade session with Ro, and he inboxed me apologizing. I said, bro, if you don't get out your feelings, you ain't gotta apologize. You were getting different options, fam. Like I'm not taking a certain way. I said, hey, half I told you, Ro told me. Like, dog, don't ever feel like, oh, well, man, I thought, I was such like, nah, we are all the monetary family, So that's why we went to monetary financial, because we was monetary men, this and that. And I was like, we got some women in here doing some things. Like, let's go ahead and just make it a little bit more unisex, folks. And they don't get me wrong, we still Instagram is that, but we really just want like, hey, we monetary. I mean, we 90% black, 90% young, we got a few other people here and there or whatever, It's funny because we got about like 3 or 4 white guys in the group, and they always peep. They don't say that. I don't know if they're not comfortable with it. I mean, Joseph said something, but he got a black wife, so he already knows it. He the Dirk Nowitzki. His wife actually opened up our business account. That's how we met him. Like, she was impressed with who we were at the bank, and she told her husband, and we met him, and he got in the group. He was actually the first person that we got in at 500 when we switched accounts, because we ended up having to switch accounts. Some laws came out because we couldn't be called an investment group anymore because we don't invest for folks. So we had to change it to a financial services group since we do educating and stuff like that. Like, it was all type of stuff. Like, we didn't know about legal stuff, but I definitely had a good time running over the stuff. I feel like, when I get to talk about it, I'm super excited. So I'm often have to told to be slow down. My wife always tells me I talk too fast when I get excited, because I do. So I'm always having to slow down, whatever. But when I get to talk it and teach it, not only I'm giving you the scoop, I'm re-drilling stuff into me. Which I love. That's one thing I love about teaching, is that I'll teach somebody something, they're like, huh, and they're like, appreciate it. In my mind, I'm like, appreciate it, bro. I forgot all about that. It wasn't until I had to explain it to somebody that I had to figure it out. So I definitely grateful for that. So trade it, check it out, try it. Don't be discouraged by some red screens, and if you got any questions in the group, feel free to message me. You know what I'm saying? I do not mind at all. Like, I do a lot of things, but I primarily consider myself a trader over anything else. So I'm always going to be putting this in the group over. And plus, I mean, we get ready to bring this real estate stuff to the group or whatever. Oh, it's about to get gangster. I'm talking community gardens and no more grandmas losing houses. My grandma lost her house before I got into real estate. That's what pissed me off and got me into real estate. I'm looking at my uncles and stuff like, y'all didn't do nothing with this house. So this house they work for just gone. I got their picture on my wall in front of the house. Y'all just gonna lose the house. And like that's the driving motivation behind me in real estate. I as many old black people that I can help. Either okay, well, if you're not selling to me, that's cool. Let me send you this thing so you get a free will. Have a free will so you know where it go to because the city gonna steal your shit. I got a family right now bickering. They getting ready to lose the house. Matter of fact, damn, they could lose the house in 6 days. They're still bickering on agreeing on the price with me. And I'm sitting like, I told them several times, they think Fat Man ain't greasy. That city gonna take that property and not gonna get nothing for it. And they're gonna be looking all crazy. It's like you could have had some paper, or you could have sold it to somebody that was black that was gonna keep it in the community, at least. But but don't worry, we're gonna bring that back to monetary. That's why we're gonna do on special, get everybody in, get a couple amped up or whatever. Then we gonna start bringing that in because we gonna start opening up all that stuff to that credit repair, everything. It's time to just turn it up a notch, Yeah, so
That's good. I'm excited. I'm glad I found you guys. I don't really exactly remember how, but I'm glad to be a part of it. I'm excited just seeing all of y'all and what y'all do every day. And when y'all talk every day, it does motivate me to want to stay on track. So, yeah, again, I'm going to look at some stuff this week. And then if I have anything, I'll come to you. And then, yeah, whenever we need to schedule another just like session where we can go over, like if I come up with my own plan and you can tell me X, Y, and Z or critique it, then we can do that.
Okay. Bet then. Did you want to do Cash App or did you want to do something else? I just assumed that everybody did Cash App.
Yeah, I'm gonna do that.
Okay. I'll type in I already typed in my thing. I'll type in my thing, whatever. Okay, cool then. So I guess we'll do that and just let me know when you got some more. If you can make it tomorrow, the webinar is at 6. And if you can't make it tomorrow, do not trip. Every webinar will be recorded and reshared and added to the YouTube. So even if you can't make it, it will be there. Okay,
awesome.
Yes, ma'am. So you have yourself a lovely night. And if this trade pops out more than 260, I'll see you a screenshot in the morning and say, see, look what it did.
Well, I can't wait to see.
I know, right?
That's going to be me one day, waking up to money.
I'm trying to tell you, waking up to it, man. Waking up to your random alarm telling you it's going down.
All right. You have a good morning.
I know, right? You have a good morning as well. I got to get a haircut in 3 hours, so I'm going to lay down and just tell my wife to wake me up when she goes to sleep. I'm going to shoot her a text. Wake me up when you wake up. Okay, well, you have yourself a lovely night.
You as well. Thank you.
No problem.